So, yeah, I remembered. I remembered. I was muted. I am no longer muted. I remembered. I should get a little star. In school you do the homework and you're very good and you get one of those stars. I never got a star. Never got a star. But I'm gonna give myself a star right now. Here we go. There's a star. I can't even do a star. All right, good morning, guys. How you all doing? Let me know in the comments. Are we trading anything today? Of course, we're going to be trading. I haven't opened any new positions today. It's the first time kind of getting into the market here, getting into the flow of things. We're going to be focusing on Euro USD and gold. Guys, let me know in the comments if the audio and the video quality is all good. Good morning, Vinicius. What's up, Henry? We get Adel here as well. And we got Kim. What's up, Kim? Good morning. Hope you're all doing fine this wonderful Tuesday. It's April the 8th. What we got going in the markets? Let's take a look. I got Bitcoin up here. And Henry, right into the action. Right into the action. GBP, JPY short on 15-minute time frame. Let's take a look. GBP, JPY. Gonna look at the 15-minute time frame. What are we seeing on the? Yeah, that looks good. Now I'm thinking perhaps. No, I'm sorry, I cannot give you a funded account. That would be weird, wouldn't it? You'd just give free funded accounts. You gotta do the evaluation, right? You gotta do the evaluation, you gotta go through the evaluation. If you're lucky, you can win a giveaway here in the live stream as well. Yes, you can. You're allowed to trade EAs. We should do that live. Maybe I should set up an EA live. You can see how it works. All right, okay. To GBP, JPY, GU looking. Oh man, there's a lot of charts on here, guys. Okay, we got the GBP, JPY short. We're looking at Euro USD short. We're looking at GU short. Let me know if it's lagging. It's man, this backtesting software. I'm just gonna have to turn it off. I'm gonna have to turn it off. Yeah, I'm gonna exit. And now, look at this. It's absolutely incredible. I've tested 11,000 strategies overnight, and it's going to have to save them all. So this is going to take a while, guys. Maybe it's going to be lagging here. We got GBP CAD as well. Okay, so let's start with. Yeah, okay, so I'm closing it down. It's not supposed to be lagging now. Okay, so I'm going to close it. I'm going to add a couple of levels here, and we're going to look at a possible short on GBP JPY. So Henry gave us a signal here. If this is a winning trade, we all have to pay our dues to the Henry. We gotta pay. Send a bottle of champagne over to Australia. If it's a loser, yeah, we're all coming to get you, Henry. We're coming down to Australia, but we're not bringing champagne. Okay, let's see. Coming up, maybe testing that level. Is this what you're looking at? I would think that this might be what you are looking at. Watch out for the spiders. Yeah, I don't like spiders. Well, spiders okay though. I don't like snakes. Snakes, that's a bigger problem. Okay, we're looking at. Oh, Henry says he's posting it on the AlphaBeta Labs. All right, good stuff, good stuff. If you're not in AlphaBeta Labs, make sure that you go and sign up to the AlphaBeta Labs with our good friends Alex and Mike. That's the link, alphabetalab.com. Free educational trading community. Highly recommend that you go check it out. Okay, so we're going to do some analysis here on TradingView, and then we're going to jump straight into MetaTrader to okay, so what account are we going to use? I'm down quite bad on the evaluation. I think I'm just going to stop being a degenerate on these evaluations. It's just, it is not looking good, guys. It is not looking good. Wow, okay, I'm down quite bad. What happened here? What did I do on this account? Okay, that's right. I had a gold position open when we had that last week, that little situation with Trump. That cost me like 800, like $600 or something on that account. Okay. Well, I do have other accounts we can trade. Right. Okay. So let's look at GBP, JPY here. We're looking at a possible short here on GBP, JPY. That's the one we're going to be saving that one. Let's move it to, see if we can move it to a list. What's up, M76BB? Good morning. Happy to have you here in the live stream this fine Tuesday. Fine Tuesday. Okay, let's put an alert here. GBP, JPY, we're going to put an alert right here. What else are we looking at? We're looking at was not supposed to add that. I'm supposed to add that one. Let's see. I'm still closing down the software. It's at 70%, so I'm just hoping for that to get done soon. Okay, so we also had GU, GBP USD. Let's take a closer look at GBP USD. Maybe we can find a short setup here. So this is Adil looking for a sell. Can you let me know what time frame we're looking at here for a sell? Are we looking at perhaps, low time frame scalp based on that level? Are we looking at a short at these levels? Let me know what you're looking at in terms of GBP USD. I would not be very comfortable shorting this level on the lower time frames because we already had a rejection here. And like if I would short this, then this would most likely be the setup where I'm entering on the confirmed rejection, stops above the highs, and then I would simply see it come down lower. GU, you know what I'm thinking? I'm thinking, okay, Adam says 5 minutes. He wants to sell this in a 5 minutes. I mean, yeah, it makes sense, all right? It does make sense, but I think we're gonna get a move to the upside. I don't like this. This looks like a sort of like a fake out before the real breakout in a sense. But what we can do here on GU is we can put an alert below these lows. So putting an alert right here below those lows. Why is it not activating though? Have an alert here. Okay, why is it not activating the alert? Do we have too many alerts? How many alerts do I have? I get 875 alerts. That might be why. That's a bit too many. Okay. We are going to clean up the alerts. Conscious Day Trader again. What's up, man? Welcome to the live stream. Happy to have you here. Guys, make sure you go into comments, hit that, go into the chat, hit that comment, and press that follow. Press the like, press the bell notification button on our good friends channel right here. Okay, so I'm typing in the RSS slingshot here because I want to make sure that I'm not removing any of these. Okay, ticker is not resolved. Okay, so we can remove these because I believe those are cryptos that might just be dead. Look at this. Look at the one and only, the world famous Dirk Hartig.
How is it going, everybody? On this beautiful Tuesday morning where everything seems to be back to normal again.
You know, I'm very happy that you joined me because I feel like coffee is not helping today.
Yeah, I think I had like 3 coffees already also, and somehow I still feel tired. Yesterday was a very long day. Didn't get really home until like 9:30 in the evening. So at my age, you know, one of those 13, 14 hours trading days, it's not very advisable anymore.
Well, but, you know, I mean, we have been trading crypto for as long, but I do feel like I'm probably 15 years older going through all of these crypto cycles.
Hey, I'm just 22.
Yeah.
Oh man, it's like I don't know. I don't know what to trade this morning. I'm looking at gold. I don't see anything that really pops into my point of view that can be translatable into a trading or into a trade. How about you? Are you in something right now?
I'm not. I mean, I'm just kind of. I feel like I'm kind of waking up and trying to figure out what is going on here. And we had someone saying GBP USD looks good for a short here on the low time frames, and I kind of tend to agree. I do think that GBP USD might actually. It actually looks quite good.
Yeah, not bad actually. Yeah. It's like on the 2-minute time frame, struggling to get over the EMAs there. Could be a good, nice short. I'm not taking it.
Yeah, but then again, I feel like after what happened last weekend and the price ranges that we've seen, you know, the Monday price range basically, which is, I guess we can draw it out. Yeah, I don't know what to say. That's the Monday price range. That's just insane. But what we have now is obviously the low time frame range that we're trading in now, and I feel like the markets they're a bit slow this morning.
Yeah, they are quite slow actually.
Yeah, again, and Nvidia started moving quite nicely after you bought it yesterday.
I know. It's like
that is a good buy.
The joy of my morning when I looked at that one yesterday. I'm still overall down with that position though, because I bought some at $108 US, I think, yesterday in the low 80s. So I think I'm like more or less now break even on that position. I actually did put in a sell order for $99 today. So should we see some magic happening today, you know, I want to get out, and then I have holiday money already. But that's
holiday Monday.
Holiday money, I said, for Easter.
Oh, that trade gets holiday on Monday. Okay,
gets executed. No, I never have holidays on Monday. I rarely am on holidays anyway. But I want this year over Easter. I'm not going to trade data in August. I'm going to take 2 weeks off completely. And then I'm going to visit beautiful Scandinavia, by the way.
Oh, really? Yeah, Scandinavia is great. Where are you going? Yeah, I'm saying like, yeah, Scandinavia is great. Like I've never been there.
I've never been to Scandinavia.
I heard it's good.
Sweden is not Scandinavia.
Yeah.
Thinking about going to Oslo and then taking the train to Bergen.
Nice.
Yeah, I would like to see.
Yeah,
a lot
the
of that
north
beautiful landscape
of
there.
yeah, the north of Norway that's like a that's like a dream place. It's amazing.
Yeah, I was also thinking, from Bergen, then maybe all the way up to Tromsø, because that's like a white spot also still on my personal map. But let's see.
There's like this area was like northern Norway, northern Sweden, and the landscape up there is just something else. It's really really beautiful in summer, very bad in winter, obviously.
Yeah, very bad in winter.
Yeah.
Okay,
so
guys,
I'm actually looking at opening a short here on GBP USD, and I am gonna use all my available leverage on this evaluation account because I'm gonna lose it anyway. So might just take a risk here. Let's see.
On GB on cable, you're going short. Okay, yeah, why not?
I made such a mistake on this evaluation account. What
did you do?
Yeah, I had a trade open during last week on Gold.
Oh, yeah,
and I got slipped quite badly.
Yeah.
Which okay, looks like I'm.
Are you in the trade already? So I think it could head to 27.50 in the next minutes.
No, I'm not in the trade, so it looks like I missed this one actually.
Oh,
okay. Well, that's too bad. Well, that would have been a interesting trade right there. So whoever gave me that signal, Adil, that's a good one. All right, Adil, thank you for this. Now you owe me money. No, you don't. But this is good. Great idea. Great setup. Looks really, really solid right here. That's a very, very good catch. Very good catch. What I wonder. Let's see. Okay, let's jump over to gold. Yeah. Yeah, we might have to do that. Need to figure out what's wrong. Talk to that little child within me.
What is that? Neuro-linguistic programming or what? NLP?
NLP stands for new long positions only.
Okay.
I was gonna say something funny, but that was incredibly boring. Very, very boring. I'm sorry, guys. Sure, half of you are tuning out now. Yeah, man. Just hit me up on WhatsApp and we'll set it up. Would be happy to happy to have you on a session and talk about that. I remember last time that was quite good actually. Okay, gold. What are we looking at on gold? Like when I see this on the 4 hour, I feel like what is this? Like it's madness. It's just madness. And we go into the 1 hour and it's like, it's complicated.
Yeah, on the 4 hour, we are exactly at the 200 EMA there right now.
Yeah.
Bounced off that. I don't know for gold really. I had some nice trades actually yesterday there. Ended up earning a little bit, but I kind of missed out on a signal this morning. Okay, that was when I was having breakfast still. Nothing really that jumps into my eye, I have to say. I think we are going to see probably the same stuff we saw yesterday, that we are going to see the volatility later on picking up a bit when the USA comes in. It's really in trading environment like this, I always feel like us Europeans, we are a little bit chicken feet here. We don't like we don't like to have our own opinion. We kind of need the big brother across the Atlantic to guide us which direction we should take for the day on the financial markets.
Yeah, and I don't think that's not really a choice. I mean, they are more or less moving the market, so it is a wise decision to wait for the Americans to wake up and go, do whatever they do. They go out and they drink a couple of beers, maybe kill a couple of alligators, fire up some fireworks, and that's their morning morning trading routine, and they drive their big Dodge Rams, like
the ones and all the smoke coming out, and
it's like only diesel, and it's like only at least 10 lot size positions when they're trading. But yeah, definitely they're the king of the financial markets. And also perhaps king of tariffs. This is a very interesting scenario that we have. So I'm looking at the S&P 500. No, I'm looking at NAS here, and I see. Okay, so basically all the indices all the US indices basically look the same structure. What I like is I'm looking at. We have a few intraday levels that I'm watching, and it's important to note that, or interesting to note that, this is the Monday high, right? That is what happened here. Was that US Open on Monday?
It must be, no? It was that like 3:30. Yeah, that's the 3:30 candles.
Yep,
no?
yep.
Yeah,
So
that was the opening. Yeah,
that's the weekend gap, and then that's the. I guess you could call it the opening range or whatever. So that is actually the Monday high, and of course also the US Open high range. The New York session high as well. But what I'm watching is we got this resistance here on NAS. And these are the intraday levels that I'm watching. And if we can, and it's also very interesting to see that Bitcoin is actually printing a similar structure, but Bitcoin only needs to reclaim like 1 or 2 levels to be bullish again.
That's the thing.
It's incredible, and the S&P 500 has needs to go up like 10% or something to be bullish again. It's incredible. We can actually I need to kind of show you what I mean here. So this is the intraday price action on the Nasdaq, and it looks pretty much the same on the S&P 500. So if we start reclaiming this level, then yeah, I would say the day would be bullish, and the next coming days we might see a bottom being formed here. Not long term perhaps, but everything happens on the lower time frames first. But then we zoom out, then really the level that needs to be it's like, yeah, we perhaps need to go up here, or at least need to reclaim this level to really, I feel, put in a bullish structure again. And even then, we're hitting this level, the good level, but then it kind of looks like a range. So now it looks like possible high time frame range here. So I would want to reclaim the range EQ. Now, that is a big move. That's a over 10% move on the Nasdaq. That's a huge move. We look at Bitcoin. Okay, we go to Bitcoin, and it's like, yeah, all Bitcoin has to do is go above here. And then zooming out, it's like it's still bullish. It is incredible how strong Bitcoin is in the current situation. I would at least have thought that Bitcoin would not only take out these lows, but maybe have an insane wick based on down here, take out some buy orders here, and a move that would make sense. Because if you compare this with the S&P 500, then we can put the S&P 500 on here. I mean, look at that. That is one insane move. I mean, you can see the price action is somewhat correlated up here, and it's correlated on the move down, this high, and that. But the difference here is crazy, and I wonder why. Why is the S&P 500 more volatile than Bitcoin in this move?
Yeah, that's a good question. I mean, I actually ran an analysis on correlations, on Bitcoin versus the S&P 500 versus gold versus the M2 money supply, and of course they are all quite highly correlated, especially Bitcoin and the S&P 500. It's like 0.85 or something, the long-term rolling 30-day correlation of both. And the question I wanted to answer is like some of the stuff that Bitcoin is supposed to do. You know, it changed. The narrative on Bitcoin changed over time. Started as a transaction system without third party needing to authorize those transactions. And then over time, it mended more into the narrative of digital gold and especially also an inflation hedge. And it turns out, actually, despite being so volatile, Bitcoin was a very good hedge against US dollar inflation. I mean, makes sense, no? Otherwise, we wouldn't be at, we wouldn't have seen the top at 108,000. We probably still would be trading at 10,000 or 5,000 or even 1,000 US dollars. And for me, but still, like seeing that actually what Bitcoin was intended to do, like to be an inflation hedge, is working quite good despite all the volatility we are seeing.
No, that makes sense. I think definitely, nonetheless, very interesting development. So the US equities have a long way to go before reclaiming bullish structure. While Bitcoin is somewhat already in a bullish structure, and all it needs to do is really reclaim the 90K region to be super bullish again. That would be incredibly bullish. Now, if Bitcoin can reclaim the 90K region before the S&P 500 is going to reclaim its level, then I would be a bit worried, of course, because the S&P 500 is I would say, a leading indicator in the risk sentiment that we are currently seeing around the world. And we can look at other indices. Well, it's not about the fact that Bitcoin doesn't have to worry about tariffs. It's not about that. It's not about that at all. Bitcoin has nothing to do with what happens in the US with tariffs. And like, it's not about Bitcoin being directly affected by the tariffs. It's what the tariffs are doing to the risk sentiment. And we see Bitcoin as a risk asset. And because the risk sentiment around the world is deteriorating because of the uncertainty with not only the tariffs, not only with the tariffs, it's recession fears were quite high before the tariffs. They're still quite high. We had the inverted yield curve. We had signs that the money flow was weakening. We had signs that money was becoming less available. We could look at things like bank lending standard. It became quite difficult to take a loan, much more difficult now than what it was a year or two ago. So things like that. Actually, I did a very extensive report on a possible pop scenario, and I'm gonna probably present that probably next week. I will present more details on that. But basically, what you want to pay attention to is economic indicators that would tell you that basically the availability of money is becoming stronger or weaker, right? And that is going to tell you a lot about what part of the cycle you are in when it comes to the credit cycle. And I'm fairly certain that we are seeing maybe not even, I mean, the late cycle dynamics, that's already gone. We're seeing contraction. I think we're in the contraction phase right now, and I don't think we're gonna reclaim bullish levels for the S&P 500 and risk assets for quite some time.
Plus, I'm just seeing we have FOMC minutes coming out tomorrow, yeah? And we have inflation numbers for Thursday. This is going to be interesting. I think especially the FOMC minutes, not so much in my opinion, but the inflation data on Thursday is going to be very interesting. I think this is going to be the narrative probably for the next year once again, to see really is there going to be, are the tariffs going to be reflected, or the heightened prices of the tariffs, by inflation data coming out? We're not going to see this time, so we have to wait until probably next year, March or April, until we can see the effects of that. But it's going to be very, very interesting to see. And it's sticky inflation, no? And I don't think the Fed also has any real urge at the moment to lower interest rate, despite what Donald Trump tweeted yesterday. He was calling out the Fed to be that they are so slow and they should lower interest rate. Shows again that he doesn't understand anything about how central banks operate, that they do not primarily care about how the economy is doing. They are more caring about financial stability or economic stability expressed in the inflation rate. So they want to see inflation rate at 2%. And as long as we don't see that, we're not going to get further interest rate cuts, in my opinion. Despite, and I think Donald Trump can, complain about that all day. It's not going to change the standpoint of Jerome Powell and his colleagues. I see the dollar index bounced nicely, huh?
Look at the GBP USD. This was really
beautiful
good
trade. Really nice trade.
Yeah, well, the beautiful analysis. It wasn't really a trade, but
well, who was that earlier who posted that idea? I hope you traded that too.
I really hope you traded that as well. That was a really good idea. What else do we have? Adel, maybe give us some more signals, man. Give us maybe I should just tune in here every day for you to give me trading signals to trade. So what else do we have here? Let's see. Okay, yeah, so I talked about the Nasdaq and the levels that we were watching on the Nasdaq. So there's a few intraday levels that I'm watching, and I believe this is okay, let's just zoom out here. It'll remove some levels. But by the way, for those of you who don't know, TradingView has a great tool here where you can basically right click here and then it says visibility on intervals, and you can select current interval or whatever, and above. So if you go lower, that level won't show. And as you can see on the daily, the low time frame levels are not going to show either. So it's good to structure your chart that way. So what I'm looking at is, okay, let's zoom out here. You can see here we have a level right here. And going into the lower time frames, there is a... Okay, so now because I did the interval thing, then it's going to happen on everything. Okay, let's do that again. Okay, so we now have a structure here. I think that should be our FTA. So two ideas here. A short down here, or perhaps down here, but something like that, and breakout, and I would target that level. These are the intraday levels that I'm watching. So a break to the upside would probably take us to 18,300. Now the prices are different depending on what broker you have and if you're trading futures or not, but the structures are going to be most likely the same looking at Oanda here. And then to the downside, we have 17K. Okay, so we got like 18.3 above and 17K to the downside. Now I think these levels can also act as pretty good range levels. Let's put the sessions on here. Do we have these sessions? Okay, you know what? I gotta remove some indicators on here. This is way too many. Way too many. The volumes, I don't know what that is. So what is this? I don't know. I don't even know what that is. And then I'm going to be adding the sessions. TradingView now has its own trading session indicator, so you don't have to use a community built one. It actually has its own sessions built in. So this is the Asian range. Okay, so this is the Asian range. Now I see a very clear trading here, and I'll show you guys a strategy that you can trade based on the Asian session.
I gotta make a move. I'll come back later eventually if I see something interesting in gold with a trade.
All right.
Take care, everybody. See you later.
Thanks for hopping in. Take care, man.
Yeah, my pleasure. Thanks for inspiring me. Bye-bye.
Thanks. So this is the Asian range, right? So here we have the Asian range low and the high. And one way you can trade this is to usually it's based on the London session, but I don't really think it matters. So there's a certain strategies that you can use here, but one strategy that I like doing based on the Asian range is, for example, let's say that price goes down like this, and then so it comes maybe down here, and you can see that you have a support zone here. Price hits that level, and then it forms a bullish engulfing candle. Okay, bullish engulfing candle or a low time frame reversal pattern or whatever, but it forms a bullish engulfing candle right here. And then what I would do is enter on the bullish engulfing candle, stops below either this structure or the low of the candle. And then I would target the Asian range again at a level that makes sense, either the low or the middle of the range, wherever you have like the best support or resistance area. So, and then if price comes back up here and shows a rejection at the range lows, we can now trade the general idea that we had to take the trade down here. So there's multiple things we can do here with the NASDAQ, and I'm going to be monitoring this throughout the day. I'm not going to be in the live stream here all day, but if I do see anything that I might want to trade, I'm definitely going to jump in and share with you what I'm looking at. It's not, well, okay, it's not just about me. It's not my guidance and my support. I would say that it's all you, man. It's all you, man. A lot of people can take what I say and they won't be profitable anyway. You know what I mean? Like it's all you, man. You should definitely give yourself a pat on the back, and yeah. I'm only here to point you in the right direction. Every success that you get in trading is all because of the hard work that you're putting into this. How long have I been trading? A bit too long, I would say. I've been trading 8 years. 8 or 9 years. I don't know. 8 years probably. I think it's 8 years. Toby, you're new here. Well, welcome. Welcome, newbie. You are in for a world of pain, FOMO, missing out. Oh man, if you're new in trading, you don't know what's waiting. Oh my God. Welcome. I hope you have a very strong... I hope you're very strong mentally. Because you are in for a treat, my friend. Trading is the hardest way to make easy money. It's the most difficult way to make money easily. Do you think sessions guide entries? I do think sessions are can be very important in trading. Not only because so many people are watching them and using them in their analysis. You can have you have a level that millions of people are watching, right? And maybe not millions, maybe it is millions. There's a lot of people trading, Nasdaq and USD. So you have a lot of people watching a specific level, and then it kind of becomes a self-fulfilling prophecy, right? But it also makes sense from a makes sense. Oh, okay. I thought you were like new in trading. You really think robbing a bank is more difficult than trading? Oh no, man. All right. What's up, bro? What's up, facts? Okay, let's look at gold. What are we looking at on gold? You know what? I don't like gold, but what I'm seeing here on gold is, yeah. Let's take a look at gold. Phil, good win. It's a good win. Let's have a good win today. Do it, Phil. Ready to have a good win? I'm ready to have a good win. Cecilia wants to short Bitcoin. I don't know. Probably not. Probably not. All right. Let's see. We have a level here on gold. I'm looking at the 5 minutes. So let's do sort of a top-down analysis and let's get rid of all these lines. This is all very confusing to me. Let's get rid of all these lines, all the ugly lines. That's better. That's clean. That's fresh. Okay. So what do we have here? The level aligns with that one. We have a break and retest of a very important level here on the daily, on the 4-hour as well. Why did that not show up? Let's add it on all the intervals. Okay, being a soldier, being a nurse. Yeah, I don't know what you are talking about. I'm not going to bring up that first comment of yours. It's what can I say, man? Life's difficult. Trading is I mean, let's face it. This is not a real job, is it? Like we're sitting, we're watching price, like a real. This is not a real job. We're just painting imaginary lines, trading like CFDs. We're not even trading real gold. We're just trading, something that is tracking the real gold of a real asset. We're not like, what are we doing? This is not difficult, is it? I mean, a real job, difficult job, that would be like a proper job, Just pressing buttons, Okay. So if we go down to the 4-hour, it's kinda retesting a level, isn't it? I mean, if we increase it up here and then we include the wicks right here, we got a line chart looks great. So is this a retest of a resistance area? Yeah, absolutely. On the 1 hour, you know what? Yep. Okay, we're gonna short this. We are shorting gold. We're shorting gold because why not? I mean, I got $36 in my evaluation account. I will risk it. I'm gonna risk it. I will risk it and I will cry later. Open the trade now and take whatever's. Okay, where should we put the stop loss? Where should I put the stop loss? Do you guys ever get stressed when you see a good setup and then you feel like it's getting away from you and you're just stressing to get all the orders right? Look at this guy in the comment. Like, yeah, I'm selling gold. If you could please comment and ask about it 10 times more, that would be great. What, 29.76? Where's my TP going to be? I don't care. Let's just go all in, full size. Okay, let's do it. Okay, we're in short. Let me put on the I am all in. Oh, look at that. It's actually working. Okay, so that's the trade. Where's my TP? I got my TP all the way down here. Is that a good TP? Yeah, I think so. Let's do this. Let's go. You guys want to see MetaTrader or MT5? I got the position open on MT5. You want to see MT5 or MetaTrader? What? Did I say MT5 or MetaTrader? That's the same thing, isn't it? You want to say MT5 or do you want to see TradingView? That's what I'm trying to say. You can just stick with TradingView here and just use the levels that I have. I mean, that does feel more real looking at MetaTrader, but how much am I risking? I'm risking whatever I have left in the account, which is not a lot. Could I start trading my? Yeah, this is actually good idea. You know, what I do is I have TradingView on my main screen here, and then I got MetaTrader on my right screen here. I'm not alone. I got you. I got you guys here. I'm not alone. I'm never alone. You know, you're trading with the 5ers. You're never alone. But I am technically, physically, and mentally alone. I'm a very lonely person, actually. It's just me, price. That's all I have. You know, it's just me in the charts. Am I bored? You know what? Like, I'm tired. You know what? I love being, you know, I love being my own company, you know? The best thing, you know, my dream is like just getting a backpack, you know, and just filling it with like food for a couple of days and then just walking straight out in the wilderness. Oh man, I would love that. See how long it could survive, right? Of course, I would bring a laptop so I could, you know, take a break every 100 meters to put in a couple of trades here and there. All right, well, this is awesome. Gold is actually looking pretty good. Gold is looking good. Now, let me kind of, you know, yeah, I mean, I can if I want to, like, if there's connection out there, maybe bring like a what's those satellite things? I don't know. Okay, so dude, I know how to survive. Dude, I've survived many bear markets. I do know how to survive in the wilderness. That's right, Starlink. But what I'm watching here is get this sort of trend line area that we got right here. And then I'm also seeing a top formation here. Some people would call this a head and shoulders. I would probably do so as well. But it doesn't really matter what you call it. It's basically a transition from higher highs and higher lows to lower lows and lower highs. I remember many years ago. Isn't that a quasi? We gotta have to get Victor in here. Gonna have to get Victor in here.
We have a quasi in its natural habitat. We have a...
All right, let's put some music on. Go. All right, we're in a trade on gold, looking good. This is a very nice little head and shoulders we got going on here. Remember many years ago, I went to Colorado in the United States of America. Me and a friend, we went up there in winter. We just grabbed 2 backpacks, went up into the mountains, and we wanted to see how long we could stay out there in the wilderness, right? I think day 8, I think like on day 7 our food ran out, and then on day 8 we woke up with like a big ass mountain lion walking around the tent. Yeah, that was so a bit scary. And then we tried, like, we got lost, and we saw like these fresh bear markings on the it's a different climate over there. Like we got bears and wolves here, but like again, we don't have mountain lions. Like that was a very interesting experience. Okay, so we got the head and shoulders here on gold. Let's take a look at gold on the 1 minute RSI. Why you need to give me some context here. Why do you want me to look at gold on the 1 minute RSI? No one looks on the 1 minute RSI, do they? Okay, let's add the RSI here. Okay, let's add the RSI, and then okay, so what is RSI telling us here on the 1 minute? We need to have a conversation about this, Mark. Mark, are you here? Mark, I want you to tell me what's up with the 1 minute on RSI. Is this good for my short or not? What's the background music name? No idea. No idea. It just says lifelike. So I guess maybe it's called lifelike. Michael. Okay, breaking 50-minute bull structure on gold. Short looks good. Thank you. You're a bit late though. We're already in gold, but thank you for stating the obvious. The 1 minute RSI does not show strength of the move. It does. It does show really good strength of the move because it's all the way down here. Now, what does this tell us? Now, remember, the most profitable way to trade the RSI is to buy in oversold and sell in overbought. Okay? Why? Because when the RSI is in the oversold territory, it means that there's a lot of selling pressure, a lot of momentum, and you can do tests on this, right? Taking the opposite signals on the RSI is actually more profitable than trading it, because the oversold and the overbought is words, that doesn't really mean that it's oversold and overbought, right? So this is okay. Well, now just because I'm talking about this, obviously it starts pumping. Okay, let's remove the RSI, and then I will have my editor remove that part of the live stream. Of course, it's the live stream, so that's not possible. Whatever. Okay, it's coming up and it's testing the entry area, the area that we broke below. Buy gold, retest trend line. Do you mean buy as in goodbye, or do you mean buy as an actual buy? I would say goodbye gold, because it's going down. We are going down. There's nothing you can do about it. Yeah, this is definitely a sell. Who's this good-looking person in the background? Who could that be? Who is that? Look at that smile. He removed himself. Oh, man. You know, he came on and... do you... Well, you haven't said anything. Like, what is there to believe? There we go. I said he's looking good, and then he removed himself. So, Mark, what was your, what was the analysis with the RSI? Do you mean that when RSI is in oversold, basically you want to be buying, I guess? Can you add yourself, Pedro? No? Yes? Okay, I'm gonna add you. All right, how's it going, man?
All right. Good morning, everyone. How's everyone doing? I was disconnected on Google, so as soon as I tried to log in, I just was removed from StreamYard.
Right. Okay.
Yeah.
I was. Oh, that scared you away.
Perfect.
Okay,
how's
so
everyone doing?
we're doing good, man. We're trading gold here. I want to comment on this. So Mark says we're looking at the RSI, but now wouldn't it make sense to see maybe the RSI? Maybe the RSI is going to come into the overbought territory. Let's see. Now here's an example where gold rallied quite nicely. Okay, it doesn't matter. What I wanted to say is like RSI is notoriously bad at picking tops and bottoms, actually. But it is quite good at divergences.
Especially on 1 minute.
Divergences on 1 minute.
Sorry?
Do you mean divergences on 1 minute?
No. Especially to pick bottoms or tops on 1 minute. Like to see the overbought oversold situation on 1 minute, where it's super volatile and there's not enough data to actually try to trade it.
That is right.
It is.
Okay, Pedro. What are we looking at today?
That's a good question. Just trying to see if the US indices actually are going to properly reverse and have 2 consecutive positive days in the market or not. I was looking at oil as well, to potential longs. I think maybe we bottom a little bit for now. What else? What else do we have? Gold, good reaction a little bit to the upside yesterday. I think it reacted from a good level. Not really sure. Like the big question now is how these lows that were created since Friday or even yesterday, is if this is actually a proper bottom or is just a small, like a temporary low that eventually is going to be broken again. That's a little bit of the question that I have at this point. So yeah, we'll see.
Do you have any issues with the alert system in TradingView? Because it seems I can't I can't like remove or add alerts. Weird.
Can remove them. Yeah, I can remove on my side. Maybe it's because you have way too many. Not sure.
Yeah, I do have quite many, but yeah, whatever. So let's. I'm looking at the Nasdaq here. I'm kind of looking at the. I guess this is the Asian range. Looking at possible break above or below. I think that is quite important levels to watch here for Nasdaq. Yeah, I think so. Okay, so it's not working. The alerts on TradingView. It's okay. So doing a service on the alerts. Yeah, that makes sense. Okay. Probably, probably because of. I mean, TradingView didn't even load for me on yesterday at sometimes, so it's probably a lot of people checking TradingView,
That's true. That's true. Yeah, when you're looking at US indices, I really like actually where the lows reacted from yesterday. So after the big gap that we had yesterday on the opening. I like where price in general reacted when you're looking at the S&P, Nasdaq, and even the Dow. Basically, S&P reacted from the previous high back in 2022, so it was a good level. It makes sense that price could bounce from it. Nasdaq also reacted from an interesting level, kind of demand zoning there. Dow also reacted basically from the previous high that was created. So I do like those levels, which means that it makes sense to me then to start looking for longs at this point. I'm just trying to make sense of everything that's going on in the world and with tariffs and everything. If it makes sense that this is actually kind of a bottom and price is starting to rally from here or not. So that's a little bit of the concern. We'll see.
Now that you're here, I'm going to take a quick break, and I'll be back in just a short while. Okay?
Yeah. Okay. No worries.
I'm going to add your screen here, and I'm going to be back in just a minute. Okay. See you soon.
Yeah. Bye bye. See you in a bit. This is just removed. Okay. All right, guys. Just ask some questions. What are you guys looking at? What time frames? What pairs or assets do you want to analyze? So ask your questions, and I can take a look at those assets. And when you do share what asset would you like me to look at, I'll just also ask you to mention maybe if you're looking for long, short, or what kind of time frame you are looking for. So just to help as well. With the analysis, or at least to be on your shoes to see what you're trying to look at in the market. But I mentioned, like when I'm looking in here on the US indices, just to now see the images of what I just said before. As you can see, price reacted really nicely in here on the S&P, exactly from the previous high that was created back in 2022, end of 2021. So it's a really good level of support resistance, let's call it like that, it was still fresh. At least the way I look at it, when price actually moved away from those highs, there was kind of a little bit of a separation here. Maybe some of you may call it a fair value gap or whatever, but there's literally this momentum that was created, and price never really retested that level on the way up back in 2024, and which becomes kind of a really nice level to potentially look for price to react from, and that's exactly what we had now on Monday after that big gap and the sell-off that we had in the last few days since Wednesday. So this is a good level where price is reacting. We can take a look exactly at the Dow as well. It's basically the same exact level. We have this gap in here, this separation, where price basically also now reacted from it around the previous highs. Exactly the same thing. You can even look at Nasdaq as well. Not exactly the retest to the pip in terms of the previous high, but it was still kind of the demand zone that was created after that break. So it's still a good level where price is reacting from. So in that sense, that's something that I try to look for when I'm looking for bottoms or tops. I try to see if it makes sense or not where price actually is reacting on the left side to then start looking for potential trades or reversals in this case. All right, so someone is asking for okay, 1 second. Euro Aussie, okay, you can take a look at Euro Aussie in a bit. Nasdaq 1 hour time frame. Yeah, Nasdaq, basically it's what Jonatan mentioned. What we're having here is that we start compressing a little bit, so we have this structure in here. Basically, that's basically where price start to compress a bit and move down. We do have this supply in here slightly higher. Then you can even go slightly more. Even there's this level as well, basically, that price could also react from. So yeah, those two levels, price could react and continue to see some selling pressure. Or price can just continue to hold within this structure, can even fake out this top if it wants to, and finding some selling pressure. In terms of longs, I wouldn't really be interested in anything up until this point. Maybe somewhere in here, maybe you can start look for some potential longs in there. Yeah, price basically already touched this level in here. So yeah, longs personally, I would look a little bit lower. For sales, maybe price starts breaking below the structure in here. Maybe it starts showing a little bit of weakness. Starts opening a little bit the door for potential price to move a little bit more to downside. But then it's about finding enough manipulation or liquidity to actually push price down. You can fake out the top in here, or you can maybe just use all these tops in here to do something like that. Yeah, we'll see with the opening how price eventually is going to play out in here on us, but I wouldn't really be looking for any longs all the way up until this wall. Prefer to look for longs underneath that in here. Yeah, we can look at dollar index and the euro dollar at the same time, so I'm going to look at that as well. What other assets this guy is looking at? Gold, we can just take a look at gold and then we'll jump into dollar index and the euro dollar, and also someone mentioned euro Aussie. Where is gold in here? Gold, what do we have in gold? So gold, second. Okay, gold in the higher time frame. Basically, we had a big sell-off, as everyone noticed the last few days, last week. On a weekly time frame, it's actually reacting from an interesting level. Within this structure in here, potentially could find some bullishness, and price actually is reacting from it. Okay, that's basically where price ended up reacting yesterday evening, and now we're finding a little bit of strength. We actually mentioned that yesterday, someone in the live stream, in the Portuguese live stream of the 5ers that we do from Monday to Thursday. Someone asked me about gold, and that was a little bit of the level that we were looking to see some reaction to the upside. It was around this previous level support resistance within this demand zone. I think gold was around this low, and there you go. Price kind of dropped a little bit more, and it reacted from a nice level that we found some bullishness at this point. However, that doesn't really mean that price is ready to go all the way to the upside. Okay, that doesn't really mean that. We need to play zone by zone at this point. So this makes sense where price is reacting right now. Basically, this previous support resistance, maybe there's something or some more selling pressure at around this level as well, if gold does want to go a little bit more to the upside. If you start breaking above this level, then maybe you can start targeting something in there. If price by any chance, for example, starts making something like this, maybe spikes up, goes here, but then it starts actually holding this level, then maybe you can look for new longs as well, maybe somewhere around this level in here. But there's even the chance that gold can even continue to push a little bit lower. So at this point, I'll be more looking for intraday moves, more of scalping situations, kind of catching maybe a move from here all the way till there, and then maybe kind of retesting again, then already thinking about something like this. I don't really think that's maybe still on the play. So it's about managing the expectations of the type of targets that you may be looking for on this trade. At least that's the way I'm looking at it. I was indeed trying to look for that short on the retest of this level somewhere around here, but this high just stopped, which we almost creating a double top in here. There was never that move into that level, so I never really managed to short it. So yeah, we'll see. But it's an interesting move. Try to understand why gold is moving to downside. That could be another question. When you have the big sell-off that happened on the risk-on assets, it's maybe because maybe there's a little bit more certainty of what's going on after the announcement of the tariffs from Trump. Who knows? But we'll see how price will react. Silver also had a massive move to the downside. Mark is going long on gold. Perfect, Mark. Where did you buy from gold? My analysis was long to 30.39. Where is 30.39? Yeah, you can go still until this level, and I think there is no surprise that price could have some kind of reaction on the test of this previous level support becoming resistance. So I don't really think there's any surprise with that. At least we just normal market structure. That's not exactly a surprise, but eventually price could go there. It depends maybe where we are long from as well, just to see if there's enough risk reward or not. I think gold is reacting nicely now from this demand zone, so that's nice. Basically, price is respecting the demand zones as it's moving to the upside. There's maybe this one that is still fresh somewhere around here. The eventual price can retest from, but it's a nice compressing move as price is moving upwards at this point. But yeah, maybe I'll go until there can be interesting. Look at the previous 4-hour candles. On any trade, it's telling where it wants to go. Well, it depends. Yeah, I'll need an example to see exactly what you mean by that. But yeah, it may depends. But yeah, 4-hour candles can tell a little bit of a story. Okay, let's jump into the dollar index. What are you looking for on dollar index? Dollar index on the dollar. All right, so does it make sense? Like, first question is, does it make sense where this low reacted from? Okay, does it make sense that maybe you could start finding some buying pressure from around where price reacted? I would say yes, it makes sense. So if I'm looking into a bigger picture of a range, basically we had this, and now finally price basically is reacting a little bit from the bottom of this range. Now, is there anything else underneath this low that price could eventually move towards to? Maybe slightly underneath, perhaps there's still that option. But overall, the level where actually this low reacted, it's a good demand on over time frame. It's closer to this bottom. So yeah, it makes a little bit sense where price actually end up turning. Now, the way price is moving to the upside, as you can see, price is already kind of compressing in here. It's basically collecting every single demand that has been creating it, and that doesn't really show much strength somehow, because eventually if price turns, price is free to just fall out of the way and challenge the low again. So if price just continues to potentially, maybe there's this level now, potentially price can bounce from here and continue to push higher, but eventually when price does turn, because every single demand is almost being taken on the way up, then there's nothing else to hold price up when eventually price actually moves to the downside. So that's a little bit of a concern if anyone is still looking eventually for longs, or if they want to trade kind of a double bottom situation with this dollar index. That may not happen. Maybe price actually eventually is going to take this low and push higher. What we have in here, we had a small gap that was created, I think, when Trump was speaking or something like that, or from Wednesday to Thursday. Price can eventually go there. I think price can maybe take this top, and I'm curious to see how dollar index may react from somewhere around here. So yeah, I'm curious to see how dollar index may react somewhere around this level to potentially try to look for new shorts or not. If price starts breaking above this top, I think then we can finally go higher into the next structure that we may have somewhere around there. So that will be a little bit more of what I'm going to be looking for. So I could see a little bit more of momentum to the upside, perhaps. Well, we'll see how price may react from this top, to be honest, because we didn't manage maybe to break some structure in here. But I would prefer to see dollar index going slightly higher before potentially moving to the downside. So yeah, but to be honest, more of an intraday. More on intraday, maybe this top can still hold price. We did manage to break this, so that's nice. That's usually a nice PI to have. So when you do have something like this, price moving and all of a sudden try to go higher. But before it goes higher, actually just makes this kind of a move or this kind of a leg down. That tends to show more of a break to the downside, kind of showing indication that price does want to continue to push lower in the future. So that's kind of a nice little move in here that we had. If the intention of price in this case, it would be just continue to go higher. There was not exactly the need to break below this low. Most likely price could just have respected this low and push higher. That would be more of a bullish scenario. While if it actually managed to break below this, it's kind of a bearish scenario for the future, kind of showing indication that most likely price does want to move lower in the future. And in the future can be just by retesting this top in here, or maybe start slowly going somewhere else before, and then finally follow through with this break. But this is kind of a nice price action move that you can study, you can pay attention to it. Just look at these type of moves that you have. This is just a tip in here that I'm sharing. Yeah, so we'll see. Maybe price actually can still keep respecting this level and push lower from here, or eventually can go a little bit higher. Maybe can close the gap. So let's try to see actually if this top is reacting from something relevant on the left, or if maybe price could make sense to go slightly higher before finally trying to push lower again. Yeah, boas, Rafael, como é que estás? Tudo bem? Jonathan, welcome.
What's up?
Yeah, and then euro dollar. We're looking just at euro dollar. Most likely can be something different. Yeah, euro. I would prefer to see it going a little bit lower. So euro actually respected that level. I think we talked on Thursday. I was actually looking for price to go slightly higher. Never did. He created the PA on the right side of the high. And there you go. I'm looking for price on the euro to go a little bit more closer to this level in here. So I would like to see actually this low to be taken and maybe go. So that could mean also potentially dollar index to go slightly higher before a potential short. Just same way maybe on the euro to go slightly lower before going long. Yeah, just in a quick look at that will be it. Pound dollar has been much weaker comparing with euro. Pound already broke completely all this structure. Pound is already reacting way lower than that. As you can see, already broke all this structure in here. And I could see maybe getting a little bit closer to this something in here. Even though maybe that's not a bad structure, to be honest. Somewhere in there.
Oh, that looks good.
Yeah, you're looking for shorts today, like on the pound. Someone was looking for shorts today, I think, on the stream.
Yeah, I was looking at a more of a low time frame short on the pound, and that it hit that TP, but I think it's could very well come down lower.
Yeah, and I'm looking at euro pound. I think euro pound is approaching an interesting level. So we had a massive move all the way through. So it finally respected the break to the upside. So I was already bullish in the long term, because in my opinion, that top in here kind of broke structure and showing indication price wanted to go higher. And then it kept respecting these lows. I was actually looking for a long, but price never really also kind of came all the way. Wait, sorry, 1 second. Yeah, I wanted these lows to go just slightly lower into more of this next structure in here, either in here or in there. But price just paused slightly higher, and then all of a sudden we had finally this massive move. But we are now getting closer to this next stop in here on the euro pound. And euro pound tends to respect a little bit the tops before eventually it breaks them. So there's always a little bit of an opportunity to try to trade at least more intraday reactions on euro pound, which is interesting. So we just fake out this top in here, and we may have a little bit of a potential reaction from somewhere around here. So I'm looking or tracking a little bit euro pound to see if there's an opportunity to short from this top. Price is starting to slow down, as you can see. Price is starting actually to create this nice kind of double top, showing the potentially if you do break kind of structure here to downside, maybe we can start looking for a move lower on the euro pound before eventually it can go higher. So that's one of the pairs that I'm paying attention today as a potential short on the euro pound. Yeah, and even if you look at the daily time frame, like it has been printing daily candles for many days in a row now, so it may be time to have a little bit of a bounce. and I don't like the compression all the way up. So yeah, we could potentially go all the way back towards this level again. Yeah, that would be interesting. What else? Yep, if you want to look at euro dollar, look at our index. That makes sense. Look at correlation. How is gold? Do you open anything on gold?
Yeah. Mark is feeling good right now. I said, look at the RSI in 1 minute, and I'm like telling him that that's completely ridiculous, but then he was actually right. So I guess hats off to you. So yeah, I mean, in somewhat of a loss here on gold. Obviously, you can look at that. You can see that it started reclaiming this level, and it's coming back up. This looks like it was a good break to downside. So we'll see what happens here on gold. I do feel like the market is quite slow. It feels like it's waiting for something. It's probably waiting for the US Open. I
think it's normal. Like after what we had last week, basically the way price moved last week, that's not the normal. So I think after a big stretch, I think it's time for price to kind of take a deep breath again, kind of regain some energy before it goes into the next crazy moves that may happen.
Yeah, definitely.
I think it makes sense a bit to slow down a little bit. Yeah.
I still think there's potential of gold to come down lower, but it's probably gonna hit my stop loss there. We're gonna have Victor coming in here soon, and really, I'll be leaving when he comes in, and I'll be listening to his analysis. Though I'm gonna be listening to what he has to say on gold. Yeah. Okay, gold so overall, please have.
Yeah, go ahead.
We have a free tip here from Mark. Let's take a look. Gold on the monthly. Okay.
Not
gold on the monthly. No, silver on the monthly. Inverse head and shoulders. Where? Is it this one? Something like that? No? Let me know, Mark, if it's this. This is what you're watching, like sort of this move. I know there's some delay in. We'll see. Okay, well.
And is it for a long then? Is he looking for long?
I guess so. But is this really a head and shoulders? I don't really see the head and shoulders. Let's go through weekly. So the thing is, this is I believe this is not a head and shoulders, not an inverse head and shoulders, and I think I need to put it in context, right? I believe you need to put it in the context. An inverse head and shoulders at like a high doesn't really make a lot of sense. A head and shoulders at the bottom, that makes sense, but not at a high. And Yes, I don't. What I do see though is just a trend line area here, and we got like a horizontal level here. Perhaps we have the trend line. I mean the fibs. I think this would make sense, but yeah, I'm not sure about that. Not sure about that as a inverse head and shoulder.
Yeah, even if it was, that looks like it's already played out as well. Like price already moved quite nicely to the upside after that.
Yeah.
Like the reverse head and shoulder it's kind of a long head and shoulder. It's kind of a long scenario, right?
Hi guys. How is everyone doing? I was away from my desk and I heard head and shoulder and I had to run to come to the desk. I said someone is calling me. They need my help. I'm here. Is there anything I can do? I'm
Well, yeah. We're trying to identify a inverse head and shoulders on the monthly time frame for silver. But while you do that, I'm gonna be listening in the background because I gotta go get some lunch.
Yes, we heard that. I think you muted right at the end of that word.
Yeah, I did. I don't know why.
But we got the message. Don't worry. Enjoy your lunch, and we'll be here looking for that head and shoulder, inverse or not. But we're coming for you, head and shoulder. Don't worry.
All right, man. See you. Right. See you later. Take care.
In a bit, Jonatan.
Bye bye. All right, I'm gonna look for my not the head and shoulder, my chart before we start. How is everyone at home or in the office or on the road, wherever you may be, maybe on a plane? I know we have some diehards subscribers. You might be on the plane, right? Or maybe on a cruise ship. If you are, hit the like button. Don't forget, we need your vote. It's almost like a politician campaigning for some votes. We need your like, not your vote, your like. Well, you vote with your like. That's how it goes. That's the democracy of YouTube. How is everyone doing? So we let's look at the market. We have I believe it was silver, and the time frame was the monthly time frame, right? They were looking for you guys were looking for an inverse head and shoulder. Am I correct?
Yes, I think that's what Mark mentioned. Potential, not a potential, a head and a reverse head and shoulder on silver on a monthly time frame, and I think that's why he's looking. I was looking for a long on silver. Yeah.
All right, I identified. I haven't identified the inverse head and shoulder yet, but I've identified Mark. This is Mark looking for that head and shoulder. So let's
start from somewhere.
We gotta start somewhere. At least we identify Mark. How are you doing, Mark? Thank you for your comment. He says it's from the 20th of August to the 1st of April, and I hope it's not a joke. I see April's first. I hope you're not joking. You're not kidding with us. Let's look at the market. What is the asset? The asset is, of course, silver. I'm gonna be sharing my screen if that's okay with Pedro. With you, Pedro.
Yeah, go ahead. You can share it.
There you go. So that's my screen. There you have it. Let's see. All right. So the silver. We start from the monthly time frame. Looking. This is the. Let me clean this up a little bit from previous markings. Previous. So the question is from. Let's see. This is the monthly, but the question was from the weekly, right? So, Pedro, not Pedro. That's not you, but Mark. Let's see. Did he say which year? 20th of August. So that would be last year. There we go. Somewhere like here up to right. So that's basically last week. Okay, so the question is if there is a head and shoulder here, inverse that is. Well, I would say.
I know he's saying that is on the monthly chart, so it's not that. Yeah, that looks small.
Oh no!
I think he's looking into years. I think it's not just starting from last year. I think maybe starts even before that.
Okay, but he said the 20th of August. I think that
yeah,
would
the
be.
question is which year?
Which year? Could you help us out, Mark? This is a group effort, right? We need your help. Let us know when you're looking for that on the monthly chart. So let's look at the monthly charts. Because on the monthly chart I did see something quite nice, but I'm not sure if that's what
okay this year meant. Okay, seeing that it is here, but okay, check it on the monthly with the dates that you put. Sorry.
Okay, all right, so let's see. That would be this year, April 1st and August there. So August last year. If this is what you mean, Mark, no, this is no head and shoulder. It's no inverse head and shoulder whatsoever. Right there, says Mark. If this is what you mean, Mark, I can confirm this is not in head and shoulder. A head and shoulder is a reversal pattern, right? That already tells you the best places to find them, or the best ones to trade are the ones that are at the end of a possible reversal, meaning when you have a bull leg, right, at the end of an impulsive move to the upside, you're looking for that bearish, meaning in head and shoulder, and at the end of a short leg, right, when price is coming down, that's where you're looking for that inverse. And you're looking at the inverse, you're asking if we have an inverse at the end of a bullish run, right? That's already one indication that if you find a pattern, if you find the inverse head and shoulder here, it's not the best one. I still can identify ways to trade them. But this is that just to begin with the context of where in at the market structure did you find it? Did you find it in inverse? You want to have it at the, potential the low of some kind of a move. Okay, that's one thing. So if anything, you should be looking for the head and shoulder here, not the inverse head and shoulder. That's one thing. And the other thing is on the monthly time frame, this is no head and shoulder, and I'll tell you why. Because if you're looking for the inverse, it means that this is the inverse, right? The inverse is very simple. You have the normal head and shoulder, right, which is roughly symmetrical. That's the normal head and shoulder. And you have the inverse, which is the bullish version of the head and shoulder, right? Nothing too fancy. We have not a quasi. I was just gonna, this is so, I'm so accustomed to paint the quasis. I was gonna do that again. No, that's the, we have the upper one is the head and shoulder, and this is the inverse head and shoulder. So basically you're looking for that inverse, right? Between these lines, August, there, here. Let me mark that. There we go. So you're looking for that, the inverse head and shoulder in this period. And if you look well, there is, if you're looking at this being it isn't. The head and shoulders, you need to be marking them with the swing points of the market structure. And let's do that with these swing points. Right, there's a different ways to do that on this is the basic market structure we have, and at least on the head and shoulder, this pattern is not identified. You see the difference? It's not identified. There is no head. You got to have an established downtrend, and you don't have an established downtrend. If anything, you only have an established uptrend, right? So higher highs and lower lows. However, you do have no, you don't even, this is not even the head. In anything, this could be the head, right? But that would be an head and shoulder, right? So the bearish version of it, not the inverse, but the bearish one, meaning you're looking for that reversal to the downside. If that's the case, then you need to take the highest point, not this one, this not the highest point, but the highest point was on the 1st of October last year. And that would make this the base of the left shoulder. And this could be I wouldn't call it head and shoulder, but yes, it could be a right shoulder, but that would make this, you know, look at that higher high, while on the we depicted it on the let me change it again. Where do we have it? There, no, there, that's the bullish one, right? If you're thinking about I mean the bearish one, if you're thinking about this being the head and shoulder, then the base, they need to be roughly the same, right? The base of the shoulders. And as you can see, these are, well, it is an ascending, the base are ascending. This would be the head. Some people still consider this to be you will see something like this, right? Still considered to be a head and shoulder. And that's fine. But the more it deviates from the symmetry, the less of a head and shoulder it is. And personally, I would prefer to have, right, if you consider the head and shoulder and the quasi, right, in this case, the quasi would have to be this, where you have it's going up, going down, that would be the left shoulder going up, and it needs to break that low, right? It needs to break it to convert it into a quasi and then come back for that move. This would be a quasi, right? Meaning it needs to break that neckline to be considered a head and shoulder. I mean, the quasi, the head and shoulder, not necessarily, right? And typically the head and shoulder needs to be more symmetrical. So it doesn't, something that, you know, all is, you gotta have some rules, but whatever your rules are, they need to be more symmetrical in general. Although there are instances where you can identify and have different probabilities depending on the level, right? That neckline, whether it's descending or whether it is ascending, right? Each one of them has different probabilities in terms of how well they predict the reversal. Okay, but personally, I don't, well, it's just a preference, personal preference, but I don't trade those head and shoulders, even those variations. I stick to my quasis. I hope that helps you, but it isn't in my book. I wouldn't consider this a there's, you know, the symmetry isn't there, and it's not a quasi. But thank you for your comment. Keep them coming. We will if you spot a head and shoulder in the wild, let us know about it. We will come and check it out, observe it with you to see how that creature is behaving, right? Like the quasi in its natural habitat. All right, so
Mark, if you can send a picture on the. For some reason, I cannot write on the chat today, that's why I haven't replied yet. But if you try to send a picture, maybe on the either Instagram or X on the Portuguese 5ers account, because that's the one I have access to. Maybe then I can bring your image. But you need to try to find the Portuguese X or Instagram account where you can send an image. And if you do so, just let me know, and I'll bring it.
Yes, this is the head and shoulder headlight number. If you see one walking around a head and shoulder in the wild, call us. We'll come to the rescue.
On Facebook, if you want to send on Facebook, send for the Portuguese.
There we go. Henry has found a way to show us head and shoulders in the chat. Henry, you're very creative. Very, very creative. I mean, I couldn't have done it. Good stuff. All right, so Vinicius, how are you doing, Vinicius? One of our regulars, one of the regulars in our stream, but as well on the Discord. We are very appreciative of Vinicius and also many more Thank you guys for being here. Locke, for example, Henry, M676, BB, and so many others that I see in the chat. Thank you guys for being here. You make these streams great. We enjoy them a lot because, for a big part, because of the regulars that are in the chat. Also the new ones, right? We like everyone in the chat. All the viewers, you're all important. Don't get jealous. But special thanks to the regulars in our stream. All right. Let's see. Vinicius had a question, I think. Victor, on euro dollar yesterday on the 15-minute has a perfect Quasimodo and head and shoulder in sequence. That would be a good example. Wow. Good, Vinicius. Let's take a look at these two specimens in the wild as you have spot them. Let's go for them. This is we're gonna break them down, right? So the 15-minute and yesterday's, right? So this is the current 15-minute chart. Yesterday is, of course, at least up to this line. Let's do our preliminary observation, the best, right? This is right Sunday. Let me mark that. So in here, Vinicius says we had a head and shoulder, a quasi, and a head and shoulder. Vinicius, did you specifically mean a bearish one, or just in general? Because that could help me. If anything, I will just look for what I see. Right? What you have is this is a quasi. I'll tell you guys right here, from where I see it. Right? So you have an established downtrend. Right? Established downtrend. There we go. And maybe that's the highest point. I don't know. I'll have to measure that. You have an established downtrend and it breaks of the neckline. That's already the basic silhouette of a bullish quasi, and it comes down. In this case, there wasn't anything to the left, and it moves out. That's it. That's the quasi in its most primitive form, most basic form, right? And in this case, let me check which one is the base of the left shoulder. Let me see what is the highest point here, which is 67.3, and this is 0.8. So basically, this is how it looks. That's the quasi. See how it's not symmetrical, but this is a very nice example of a specimen. I mean, of a quasi, and the head and shoulder. Right. Remember, the head and shoulder we need symmetry. Let's see if what I see here. There is also let's see. You could make a case, right? You do have a quasi here as well, breaking that neckline and coming down to some structure, and you can see as it gets to that order block to the left, right? There wasn't a lot of structures here. It had that reaction, okay, but it wasn't the reversal pattern, right? The market is fractal, so you're gonna see these reversal patterns in different time frames, but the best ones are the ones that encompass, right? They include the whole range of the movement. Meaning, you want to have, if you have this as the head, and this the left shoulder, right? That's a quasi, but that's an inner quasi, right? Within the range. They can still work, and you can still trade them, but the best ones are the ones where the head actually is one of the extremes of the range, meaning this, right? So the quasi, the head of the quasi, the one that I depicted first, that's the head, and the head is also the extreme of the range, meaning you got the biggest quasi in the whole structure, and those are the best ones because the market can sometimes it uses the inner, within the range, but you're safer if the quasi they're using is covering the whole range of the market structure. So this is I saw a quasi. let me see a head and shoulder. I don't see the head and shoulder, at least not in this time frame, because to me, well, you could say this is well, no, this wouldn't be a head and shoulder, where this is the head. If this is the case, Vinicius, if this is what you meant as this in the head, and this the left shoulder, and this the right shoulder. I'm sorry. Instead of explaining it, I'm confusing you guys, right? The head, the left and the right shoulder. If this is the head and shoulder that you guys are seeing, actually, of course, the structure is not this. I see it now, right? You will need to include the swing points. But is it a head and shoulder? Let's look at that. Well, to me, it's up to you if you consider this to be sales symmetrical. But to me, it's a quasi, right? It breaks the neckline and goes lower, right? It's still roughly not too far away, and it comes back to move the other way. But this is the same. Notice the same issue. This is a bearish structure, right? It's not an inverse. It's a head and shoulder. I mean, if to you this is still head and shoulder. I mean, if it's not too asymmetrical, if it is, then we're talking about a quasi, which is why I use the quasi. I don't have to, have the definition of the head and shoulder with that symmetry in its way. How do you find what is still symmetry? Because in the market, you're not always going to have, precise. Sometimes you do, but most of the time you don't. The base of these shoulders are not equal highs or equal level, right? There is some little difference between them. And how much difference do you allow it to have as a head and shoulder while still considering it to be roughly symmetrical, right? That's an issue. It's not a big issue. You can still use the head and shoulder. Of course you can. But I prefer to avoid it altogether and just use the quasi. I don't have to look for decide is this or isn't a head and shoulder. If I just use the quasi, then it is in let's see, if I just use the quasi, then whenever it breaks that line, a very specific objective line, it breaks it goes 1 pip below, I have a quasi. That's it. I have no discussion about it. And I like that when I trade, because there's a lot of uncertainty already in the market, and we as traders, we need to look to simplify all that seemingly chaos that the market is throwing at us in terms of data. And that's why we use patterns, right? Patterns is a way to simplify things, breaking it down into understandable, chewable blocks, right? We can digest and do something with it. Because if you don't use any patterns, you're gonna be using everything, right? And there's so much information. You gotta break it down to some level that you can still use. So this is, I would consider this. It is a quasi, a very nice one. Thank you, Vinicius, for that. This would be the left shoulder, the head, and actually. This would not be the right shoulder, because the right shoulder can only come, if it is a quasi, after it takes out this neckline, meaning that this would be considered, but this would be if price were to go much lower. Let me see this. Did it go make a lower low? No, it didn't, right? So that means that we're still at play, and this would be then the right shoulder, right? Presumably, and you could have been watching this, you could have traded it, but I already see that you probably wasn't the best scenario to get in. It's not the best in terms of probability, because it's the end. It's a bearish structure at the end of a bearish move, right? You want to have them as a reversal at the end of a bullish move, right? Price is coming from above. You want them to be coming from below, but it can still work. Just the probabilities and the targets are different if you do that. Well, this is the let me mark the proper way to do it, and of course proper according to me. So if it's not according to you, that's fine. This is one big area, and that's the area you want to be waiting for price for that right shoulder to come into. And this is a beauty of a thing. Look at that, right? This is, I know it's a big area, but that's the area, right? It comes back to it, not a lower retracement. It comes back to it, and you can go down on a lower time frame, look for reasons, indications that price is returning back to go short, and you get in at, you know, whatever indication or whatever confirmation you get from price action. At least that's how I trade, right? Go to the 5 minute if you have a chart pattern on the 15 for that move down. All right, so I think we covered this nicely, and this is a very nice one, I would say. And the target is this, the bottom of the, at least for me personally, this is the target that I would be looking. This is the completion of the head and shoulder. Is that true? That is, well, actually, let me. Yes, this is the bottom. That would be the TP of the market. And if I were to trade this, if someone is already in this trade, I would go to the higher time frame to see any structure that could stop price, and I will put my target right at one of these structures, right? For example, this. So that means that I'm already taken profit. If I enter here, I see that there is a reason here, a structure that could reverse price, and especially if you see that we you know, the run as a head and shoulder, it's not the best one, which what I just mentioned, right? It's a bearish structure. You want it to be at the end of a bullish leg, but the bullish leg is only this. This is the bullish leg, right? It's not, you know, in comparison to the rest of the market structure, you could expect, right? Because since we're coming from an impulsive move, right? If you zoom out, you could, you know, reasonably expect at some point we're gonna have a continuation of this impulsive move, meaning you don't want to be targeting with your reversal pattern you saw here. You're entering here. You don't want to be targeting something if it's against the market structure. If you do, you're putting yourself at a lesser probability setup, and that's not what you need to be doing. You need to be incorporating as much of information as possible, market structure, trend, etc., to and adjust your TP for them to be, you know, be hit with a high level of probability. So I would say I would just, you know, take off the trade right here. I know it's just a little bit, but if you do it well, that could be plenty of edge to be had on that move. Thank you, very gracious, Vinicius, for that that indication of that pattern. Let's see. Mark is Mark says Mark says, what's the mask? COVID was 2 years ago. Hold on. Nobody ever told me COVID is over. I thought it's still on. That's the whole reason I have the mask on. I gotta ask everyone around me because I thought COVID was still a thing. Man, I'm completely out of touch here. All right. Mark, very good observation of yours. Very good observation. You got a good eye for detail. I really gotta give it to you. All right, so Mark, Pedro, go ahead. Sorry to interrupt you, Pedro.
It's okay. So Mark finally shared the picture, and we have the picture here. Maybe if you can share my my monitor. I think one of the first confusions was initially Mark said that this was a pattern created this year, but as you can see, he was looking for a pattern that was created all the way almost back from 2020 to now. So when you start doing your analysis, and you are doing your analysis only basically within this structuring here, you don't really see any reverse head and shoulder or whatever it may be inside this structure, right? You needed to look at the bigger picture. That's exactly what you draw in this situation. In here, yeah, maybe you can see some kind of reverse head and shoulder or whatever you want to call it, with maybe potential target all the way from here to whatever, like something like that. So yeah, Mark, I think initially the misunderstanding was where Victor was looking for your pattern, which was just at the end of the cycle where you mentioned the 20th of August until April, whatever it may be. But we needed to look at actually at a bigger picture. That's why when you mentioned the monthly time frame, it will make sense to actually look at years back and not just a few months back. So that helps a little bit to understand maybe what he was looking for before. It's more inside the structure in here, and maybe that's already played out. If that was a trade, that most likely has already played out in here. Wait, not even this one.
Actually, let's break it down, because I think when I started on the monthly, I did see this pattern, but of course, the chart has all the time of reversal patterns, because it goes up and down, and each time it does one swing, you could find potentially a reversal pattern, because that's one of the ways it reverses. So we need to find like what the period to identify, this specific reversal pattern. But I'm gonna show my my chart. Maybe I can do the breakdown of what the pattern that Mark was referring, if that's okay with you, Pedro.
Yeah, go ahead.
There you go. All right, so on the monthly time frame, Mark was mentioning about about 2020, right? If we do that, then yes, I can see this would be the head, obviously, right? That's an inverse head and shoulder. Now things are making sense. This would be the head, and that would make this, of course, the right shoulder. We do have the established downtrend. Whether you call this a head and shoulder, right, or a quasi, is up to you, because there is quite arguably some symmetry here. It does look roughly symmetrical, but as so a head and shoulder, yes, there is one. It's clear, and it's already did its job, and typically, right, you would be taking the baseline and extrapolate the distance between this, and then add that to that baseline. Whether you put the baseline on the first one, the second one, if someone in between, is variations of how things are done. But this is the measured target for that head and shoulder. Okay, so we are very close to it. So you could, as Pedro said, this reversal pattern it's almost completed, meaning the opportunity has already gone. The typical area you would be looking for the entry would be that candle which breaks the neckline. Well, whatever, depending on where you have the neckline on, you could even mark it as diagonally, right, where you have it breaking it. And when it comes in here, as it is confirming and giving you perhaps something on the lower time frame, this is the place where you would be getting in, putting your stop, depending on how you measure it, either below the candle's low or below the whole structure, and you target that measured move or something to the left perhaps. And this would be the proper way to trade the head and shoulder, or one of the classical way of trading the head and shoulder. Very good one, Mark. I really liked it. I do. This is a good one. Of course, the opportunity is already gone, but I don't think that's what you're referring to as an opportunity, but more as in an example, a good example for you that you saw. That's a very good one. If we were to trade, look at the bigger picture, Mike has joined us. How are you doing, Mike?
Hey, gang. Hang on a second. Hey, gang.
Morning.
Sorry about that.
Always
Like
as funny as always, Mike. Yeah. So if I were to do the top-down analysis on this pair, since we already have it on, I would be saying we see the obvious pattern here, which is on the monthly time frame. Do we have it? Actually, we do. So we have an uptrend, right? It's all the way down here. See the uptrend, established uptrend, and actually, that's not even the structure that I was looking at. This is the uptrend, right? The smallest one, you could consider this as well, but in that case, the quasi wouldn't have entered. This is the uptrend, right? You have a higher high, higher low, and price it then comes back to, let's see, on the neckline, this is the quasi. Did price break that structure? Did it indicate some kind of I'm going to say weekly, although it's not the weekly, it's the monthly. Did it break that neckline? Yes, it did. Then once it does that, that means that we do have a quasi, right? There we go. I mean, give us that chance to measure it. It doesn't look like a head and shoulder, but that's the whole point of a quasi. It doesn't look exactly, it just fits the bill, it follows the rules, and it complies with them to be a quasi, and it is, which is the established uptrend, takes the neckline, and then you look for the reversal on structures between the head and that last lowest swing. So if we do that, let's measure the this is all the way from the monthly time frame. So it's very interesting. These moves can be massive when they actually hit the market. All right, so we got here one structure which is already measured, and this one is all the way here. It goes lower, but that order block is not according to my rules, that isn't the entry order block, right? It is an order block, but not an entry order block on the quasi. So you only have two structures, two on the monthly time frame, which it has a high likelihood to use if either it's going to just drop when it reaches them and not be a complete reversal on the market structure, or it is going to be a big reversal and it's likely going to be used in these two structure. Not all of the time, but there you have the probability stacked in your favor. All right, so we have that, and sure enough, price comes to this level. See on this wick, for example, see that wick, how it that in that same candle it reaches it and leaves that wick. That's a sign it's reacting to that order block. All right, so we have that. And so now what you want to be seeing is you want the market to tell you that the sellers are taking control, right? And it needs to get, the second thing is it needs to get follow through. You got a bearish engulfing here, and we are currently in the second bearish engulfing pattern on the candlesticks, indicating sellers coming in. But actually I do like this, but I would be looking for the quasi, right? The quasi in this pattern, right? When I see this, whenever it happens, it hasn't happened yet, as we've just discussed, whenever it happens, then I would be wanting to take the short on the higher time frame, the monthly, and target something below us, something perhaps this order block could be a very nice area to be targeting, right? That would be an awesome trade, something away from the complex, right? This whole thing is just one big complex, and you want to be targeting something else. Of course, the ultimate target is the low of the whole structure, but that's very ambitious, and considering this is the monthly time frame, you gotta be reasonable with your targets, especially when these are in those very high time frames. So that's what I would do. But this is a very interesting place we are on silver, right? Because if we did get one printed and the other one just showing, it's at the beginning of April. So the second one, we still have a lot of time to wait before it gets definitive. But if and when it gets definitive, we could be looking on the other time frames for possible signs of that reversal, right? This would be on the weekly time frame, where I would be looking for that break of structure, that quasi on the, there we go, it hasn't happened yet. And yes, so this is not ripe yet, like a fruit, right? You need to wait for it to get ripe before you eat it, right? Quasis are the same. This is an unripe quasi. You have to wait for your turn before you can consume it. All right, that's a very, very good one. I like that one. Mike, what are you looking today? Where's the opportunity according to Mike?
Where's the opportunity according to Mike? opportunity, according to Mike, is don't follow what Mike does. Mike is a fool and has no idea what he's doing. Mike is an impulsive, crazy idiot who jumps into things that he has no business jumping into, and then soils himself as a consequence of such actions. So I am doing my top down, because one of the things I've been doing is I've been jumping in, jumping out, jumping in, jumping out, because I'm doing just too much everywhere. So I am going back to basics. I'm going back to my full top down analysis on one asset, which is gold. And I'll probably regret this, but I'm going in, looking at gold, and I'm going to look for my opportunities. But what I've been doing is I've been catching really good trades, but then because I haven't done a full analysis to identify where I feel turning points are going to be, I'm then getting caught out. So with the market the way that it is, there's great opportunities to be had, but I am very, very reluctant to keep making foolish mistakes by just jumping in at something that on first glance looks good, but actually deeper analysis doesn't look good. So I am going to be looking at gold, because I think gold is just going to have a ton of opportunities. But I want to make sure that I catch the big ones and not just something that's going to take me out or leave me wondering and guessing. So that's what I'm looking at the moment. So I'm marking out all my liquidity levels on gold. And at the moment, I kind of see more sellers coming in at some point. Than buyers, but a little too early to say for sure when and where. But as I say, I'm looking out for the liquidity levels right now to see what is sitting where, because we have just been on such a bullish run for so long that we have left levels of liquidity. If I pull up my chart,
yes, please do.
These lines in purple, these are 3-day and above timeframes. So you can see on my chart, I look at the 3-day, 4-day, 11-day, 22, weekly, and monthly. Now, you may think I'm crazy, and probably you'll be right. But these give me levels that price is very, very likely to target and hunt down at some point, depending on the structure that market forms. At the moment, on the 2-day, our previous candle was a very, very significant and large engulfing candle to the downside. So starting on Thursday last week, we had a very, very large engulfing bearish candle to the downside. That suggests that we have maybe changed direction. The only thing is that we need to be sure of it. We need to see price come back and retest that wick, that zone at the top. Now, it did leave a trail of liquidity behind it, but the higher the time frame, the stronger the liquidity level. So I'm not saying that we're going to come all the way down to 2,000 or something like that, because that would be absurd. But there are going to be levels and there are going to be positions at all of these places. At all of these places, there are going to be positions of people who were trying to sell gold at some point or another. And it'd be interesting to see how many of them have just been decided, right, I'm just going to take the loss, and if anything's still sitting there or not. But at some point, we're going to have to provide some kind of a decent correction. So at the moment, I'm just looking through my charts to see what can I find on the lower time frames. At the moment, not this one. Don't know why I've got that marked out. But this one here, this is a key level down here where we've got a monthly, a weekly, and a daily as well. So this one is, not 4-day, 1 day. This is an important level because this candle here on Monday, the 3rd of March, opened up without any wick whatsoever. So the market's opened on the 3rd of March and just shot and didn't even think about it. So that for me is a really, really strong level of price that I think is going to get taken at some point. I don't know when, but at some point. That's very kind of you, Agatha. I'm delighted to hear that. Purely for the comedy effect. Don't listen to anything else I say.
It's not Alexander the Great. It's Mike the Great.
But you know, this is where this is where it starts to get really interesting. People look at me and think I must be crazy for looking at the 22-hour, right? But if you look at the 22-hour and you look at the principle of what I say about inside bars and engulfing candles, right? You've got an inside bar here. What did price do? It came up, took the high, and then went down, took the low. Did it again here. Took the high, went down, took the low. What's it done here? Oh, well, actually, it's left an inside bar. What do you know? So there we've got a 22-hour inside bar left to be taken. We've got another one down here, and we've got another one down here. So there's key liquidity that more often than not, when we're in a very, very strong trend, price will come and start looking for it. And these are levels that have been left behind. So that's why, for me, I think we're in opportunities for sells rather than for buys. But I need to see more liquidity taken. Here we've got a 12-hour, for example, inside bar on either side that hasn't been taken. So I want to see either price have a very strong reaction to say, no, we don't want this inside bar, we'll come back for that later, or for it to take it and then have a reaction somewhere else. But really the next area of reaction, at least on the 12-hour, is up here on this zone here with this engulfing candle. So that's a strong area potentially. But what I do is I look through it from top to bottom and then kind of refine it down to see where are the liquidity levels that price is most likely to hunt down. And I build that in with whatever structure that I can see on the chart as well. So that's what I'm doing. I'm not doing strength scores. Forget about strength scores. It's a bad idea right now. Forex strengths are all over the show and they're just eating me up and spitting me out. So that's why it's time to go back to my roots, back to my origins of gold when I lost even more money, and see if I have become a wiser student of the markets to regain some profits. So watch this space.
That is well, thank you for that. So you're in the search for the liquidity levels, and you do see a, in short, you do see a possibility of upwards move, but you're not convinced yet, right? You still need some more confluences, and your go-to indicators, right, the strength meter, don't seem to be, capturing the read on the market, the proper read on the market currently. That's what you're seeing, right?
Yeah, not for Forex. For Forex, it's just too volatile. I mean, if you look at it, we've got no news. Like, we've got, apart from PMI coming out today, there's nothing happening. So what I'm looking at now is I'm just looking at financial juice all the time, and I'm just constantly keeping an eye on financial juice to see, right, okay, what did Trump tweet this time, and just looking out for any red markers that come out, because the red markers are going to be the ones that really push things. Like, for example, here you had one which was actually an economic news event, but if I go back far enough, I'm sure I'll find one where things just went nuts. There we go. If there are no fair deals, nations can't participate in the US. So these are the kind of things that that are going to be really important to keep an eye on.
Yes, yeah, we have someone who has a great title for you. It's not Mike the Modest, it's the great Mike the Modest. I like that.
Oh dear, yeah. Not sure
Mark,
about that, Hamid.
Mark, in the Mark, our esteemed viewer, Mark, we appreciate you a lot. You gave us that idea or comment to start looking for that head and shoulder, inverse head and shoulders, and we follow your lead into the area and so on. But I see apparently this is what Mark types. The chap with the mask, who might that be? You guys know? I'm not sure. Who might that be? One of us three, I'm not sure. Could that be me? I'm not sure, right? I think it's you, Mike.
I don't know. I'm not sure.
The chap with the mask couldn't see the most obvious reverse head and shoulder. Not giving me much faith, guys. Okay, Mark, I'm sorry I broke down your faith in us. No, but on a serious note, thank you for your feedback. We appreciate it. Everyone is entitled to their opinion. It's all fine, no problem. But keep on coming, keep hitting the like button. Even if you have less faith in us, hit the like button, subscribe to our channel, and join our audience more often. And I'm very sure we will do something with that faith. You will be one of those religious ones among the audience. Don't worry, just keep on coming to our stream as much as you can.
The other thing,
Okay,
the other thing I would just add, Victor, is Mark, you've obviously got an eye for the markets. If you've got a camera and you've got a microphone, then email the trading room, and Jonatan will take a look, and maybe you could come and join us on the stream. You never know. So yeah. Venetia says, Mike, the best is do the analysis on gold and trade Euro USD. Yeah, that's not a bad take. The only problem is that gold doesn't necessarily always follow Euro USD, because you've got to take into account the euro dynamics. But I don't disagree with you. In terms of volatility and moves, Euro USD is the one that moves the most as a Forex pair. But don't know. As much as I live in the EU, I'm not sure I trust it.
What is you don't trust? EU,
just
you mean?
Just the euro.
Okay. You mean right now, or is it more of an ingrained distrust on the currency of the continent?
No. I don't distrust it. I just think it's very cumbersome, and it's hard to get a good read on the euro because of the fact that you've got so many different variables coming into it. So gold is a little bit more of a purist's asset to some extent. The dynamics with gold is going to be interesting based on, okay, if, and this is a big if the dollar becomes steps away from being the world reserve currency, what does that do to gold? And how do we start trading gold? So that's going to be something to consider.
Yeah, that's a very fair point, because with all of this, the person in the Oval Office is doing, you do hear some rumors out there on the headlines. Is this going to affect the reverse currency, not reverse, the reserve currency status of the dollar? We've been hearing this for many years now. It's eroding. The brick is coming on. We're gonna have some, alternative, the renminbi, or you name it, crypto. Who's gonna replace it? And so far, the dollar is still king, and is likely to be king for some time. But every civilization has its end, and I'm gonna say here, the end of the Western civilization is nearby. But I mean, if you look historically, right, the Egyptians, they were the superpower of the world for many hundreds, if not thousands of years. And then you have the Romans and the Chinese and so on. So each civilization has it's a normal development where you have some kind of a peak where they are above everyone else, and then that erodes. That process erodes slowly but surely in centuries. And then one of the key things is that their currency is the reserve currency, right? Trade is done in their currency. When the Egyptians were the leader of the world, or at least the world they knew back then, their currency was the one that everyone traded in, right? That's still the US dollar right now. But in the greater schemes of things, at some moment, it's completely reasonable. And I think, even it may not take hundreds of years, or maybe it will, I don't know, but at some time you will have the reverse reserve currency being overtaken by another upcoming leader of the world, right? So that process is an ongoing, not just super macro. This is gigantic super macro time frame, because we're talking about hundreds of years. But if we zoom in, if it's happening right now, we've been hearing this for very long. That the dollar isn't what it used to be, and maybe that's fair. That's a fair point. But I don't think these, the position of the U.S. dollar is going to change this quickly, just because this president made some decisions that the rest of the world doesn't sit well with the rest of the world. I don't think it's that easy. I think it's sort of like those big mammoth of tankers. They move very, very slowly, and that's what these things are. They take years, if not decades, to develop. It's the same thing with demographics, right? Demographics of a country is not something that changes in 1 year, right? It takes a whole generation, and sometimes not even 1, but 2 and 3 generations to change the demographics of a country. It's the same kind of thing, much higher time frame for these, the status of the reserve currency of the world, which is currently still the US dollar.
What are we talking about? What came into a show talking about trading?
This is an history stream.
Wrong thing. We're talking about bloody history. Is anybody actually trading anything?
I opened up a can of worms. My apologies. I triggered Victor into a discussion about the dollar being
talking about
the reserve
macro.
currency.
Oh gosh.
Yeah.
We do have
that's pound Aussie dollar for a long. I'm just checking, just throwing that out there. Maybe there's a potential long on pound Aussie dollar. Not that I've ever looked at it ever in my life.
You've never traded it, never looked at it.
Never looked at it, but it looks like it wants to go up for a little bit.
It fancies going for a walk upstairs, is it?
Not a walk. It looks like it wants to take an elevator upstairs.
That's nice. That's quicker.
Let's have a look.
Yeah, elevators are quicker than the stairs.
Not so sure.
Well, it
On a
depends
5-minute time frame.
On the 5-minute time frame, so it's not really going to take an elevator. It's going to just take a couple of steps.
Well, depends how
close you are.
There's a little bit of liquidity up there, Michael. I know you like liquidity.
I love a bit of
liquidity. I do see that fresh order block being nicely. Maybe I can. Well, I'm not sure if you're in the process of analysis, Mike. Maybe I'll wait for you.
I'm just long.
Alex is long. I reckon if it can break that, then fair enough. But
that's what
if you look at it. But
look at that reaction. Here we go. We got a boy. We got the boy in. He's coming in. Look at it, gang. We got everyone. You just got to give us a thumbs up. I'm not going to say who it is, guys. Oh, there he is. Bam! Look at it. I came in the right time, didn't I?
Hello.
Came in the right time.
What's up?
How you doing,
Griff?
Right?
Hey guys, good to see you.
It's Griff in person.
It is Griff in person. Yeah.
It's in person.
How are you doing, Griff? How is your day going?
Yeah, going well. I just got a whole history lesson before I joined the call. No, that was super interesting, Victor.
It is for those who are interested in this. There is a couple of videos online of a guy, a very, very successful investor by the name of Ray Dalio, who explains about the rise and fall of civilizations, and that's what I was talking about. And the reserve currency is one of the indicators in that process, in that development that takes centuries to unfold, right? The rise. There, I think he talks about 7 different indicators, which indicate where in the cycle of development each civilization is. But your Aussie, your pound Aussie, Alex, is.
Do you get this anywhere else, guys? These live signals that we only talk about when we actually get good ones. All the bad ones from this morning we forget about. Okay.
There weren't any bad ones this morning.
We didn't have
happen.
any bad ones. They weren't bad trades. They just didn't end up profitable. But
Exactly.
yeah. Yes, it is going well.
That is some kind of a move, Alex. You gotta show us that crystal ball, because it's been working very nicely on
Crystal
pound
ball?
Aussie.
That's what it is, mate. A little bit of coffee, and being in the ABL. That's what it is.
Mm-hmm. That's what it is. That's what it is. LG says, "Yeah, speak for yourself, Alex."
Yeah, that's true.
LJ basically makes Alex and I look bad. Really, LJ makes me look like a addicted gambler.
That's not a bad thing. It's a bad thing if it's a bad thing if it doesn't work. But if it works, then you can never change. We would never want to change you, Michael.
It's a bad thing if it doesn't entertain people. That's what it is.
You
It
actually
doesn't
have
provide
a
entertainment to people.
actually a pound on the 1 minute. That move that we had. Actually,
Yeah, this is the move
perhaps
that we got caught out this morning, guys. On the screen, got to delete that. Forgot to delete it.
I deleted that. I deleted that from my chart. Why did you delete it?
God.
Making us look foolish.
Griff, tell us a little bit about your new challenge that you've been taking on for the 5ers, because I've seen your YouTube video.
Yeah, so I've started a very dangerous series where I'm going to be sharing every trade I take, which I guess you guys are used to. You're sharing your trades on here all of the time.
I
so
feel
I'm just trying to
like that
catch-
needs to be accompanied with the song, like every trade I take. What's the rest of that song going to be?
Every
Needs to be some kind of a
trade
theme
I
tune.
take.
There you go.
Yeah,
I knew I could
have to
trigger
make
it.
a new intro song. Yeah, so I'm just going to be sharing all my trades, trying to pass a 100k high stakes challenge. It's a monthly series because I'm a swing trader, so there might not even be any trades some months. So I'll have to try and think of a way to make that interesting.
Yeah.
But yeah, so far I've taken 2 trades, both losses, which is fine. And yeah, I'll keep you guys posted.
How are you mapping out this market when everything is so fast and changes so fast? Because a swing at the moment, I say it's a day trader's market, because you have to be in, you have to be out, you have to be able to change your bias, just for the pure fact that there's so much volatility from either side. For God's sake, yesterday we got fake news, that there was going to be a pause on tariffs. Then 30 minutes afterwards, it changed, and it's just like this zip backwards and forwards. So as a swing trader, how are you tackling that? Because that's quite difficult.
Well, I'm a price action trader, firstly, I'd say. So quite often you can see it all reflected in the charts, in the candles. So whether that's price moving sideways, breaking highs and lows, or volatility, like you just described, where price is going in one direction and then the other really quickly. Like that price action, I'm usually just staying out of. So yeah, my plan keeps me out of that price action.
In other words, basically Griff saying that he's just sensible and takes his trading seriously and professionally.
Michael, stop talking badly about yourself. Honestly, you're doing well, mate. Honestly, it's just because a couple of losses this morning.
Oh, don't,
mate. It's fine. Take it on.
Oh, guys, I'm gonna come back in an hour or so. Have fun, or is it an hour and a half? I'm not sure, but it doesn't matter. I'll come back. See you guys soon again.
See you in a bit.
See you,
Sounds
man.
good. Good to see you.
I'm going as well. Have a good one, guys. Enjoy.
Just the 3 of us. We gonna make it if we try. Just the three of us.
Is my connection okay? I was when I
Your
was
connection
describing.
is rubbish, bro.
Is it?
Yeah, man.
Sorry, guys.
That
He's
is
such a
that
tease.
is a GIF gaff connection right there. That's a GIF gaff right there.
You're on gift cuff.
Yeah. It's funny when I was younger. Like if somebody used to call you on your phone, you didn't pick up, and it would come up with a GIF gaff voicemail. They would always used to tease you about it. Like I don't know why. It's like you're not on, you know, if it was Tesco Mobile. Oh, you're on Tesco Mobile. You know, it's like little kid stuff. It's funny. It takes me back.
Oh, the good old days, eh?
Yeah. Do you want to run us through some of your progression so far? Then show the gang what you were looking at.
For the trades I've taken in the series so far.
Yeah, or do you want to keep that for the videos you're doing on YouTube?
Well, last week I showed them. There might be a different audience. The AU flag, I can share that. But yeah, I've not taken any trades since, so really not exciting. I've just got the same trade as last week, unfortunately.
So you're in a trade now, just waiting, or you're flat?
No trades at all.
Mm-hmm. Fair enough.
Yeah, last week was.
Do you know what that
NFT.
in a way is hard.
Oh,
It's so hard to be able to sit on your hands and just say, nope. Like the biggest, most monumental market shifting event in terms of economic structure and how the world does business. And Griff, the mental discipline you must have to say, no,
Mate,
not my
me
setup.
and Mike opened the day with ABL going, this. It's like we're like kids in a candy shop, you know. And it takes us the end of the day to get all of that back. I don't know why. Like for good examples, this trade this morning that we had, I had the thought similar to the trade that I've got right now on pound dollar. I think I took a loss on that. I don't remember taking that trade, but this trade this morning, same kind of thing that we had on pound Aussie dollar, the same type of technique. I got caught out today, and it's funny because we had earlier in the session, we had where was my train of thought? We had clear observation that it wasn't going to hit, and it's only after we like inverted, I noticed that was a clear weakness in the pound, and that it was going to come down lower. I just want to know what you would look at the pound and how you would analyze what's going on there at the moment. Griff.
The pound dollar.
Yeah.
Yeah, I can take a look at that. Would you like me to look at it on my time frame or your time frame?
Do it yours. I love listening to the way that you look at the market and all.
Yeah, sure thing, man. Let me bring that up. Let me know if my connection cuts out. You guys have been very kind. I think I'm lagging more than you let on.
Probably, yeah.
Can you see my screen okay?
Let me pull it up. Yes, indeed, yeah.
Cool. So, sorry, Alex. You said you've got a position on at the moment, or you had a position previously?
No, so this morning we had a position long. So where you see that break-in structure, the one that you've marked out, the break-in structure from all in, so that where you'd see that inner boss, and then the retest, that kind of flag pattern is where we were long.
So you took
right there. We took the long
here.
off that, exactly. So we took the long off that.
Interesting.
So break of structure, retested a 50, and then we were looking for it to push up to break, to continue up, but it came down and found support at a 50 level by the looks of it.
That's interesting. I would be like, at the moment, I can understand looking for buys after this kind of break and retrace, because right here I see a shift in momentum, an engulfing candle. So we had all this trend down, and then we got this big shift up, which can say two things: either we're going to range or reverse. Normally, is what I see when we get that kind of shift in momentum, an engulfing candle like that. And then to strengthen that idea, we broke the low and immediately retraced with, and I would say this shows a shift as well. So I'm not surprised that price. I wouldn't be surprised if price pushed up like you thought, but I would say that we're going to range based on how big this downtrend is, and I guess that's what we're seeing. I think the next thing you can expect from here is more of this breaking and retracing on both sides, or for the downtrend to continue, because like you mentioned, it's kind of like a flag. So breaking above this high, like this isn't too far off of one of my flag entries. Like if we hadn't broken the low here, this would literally be one of my flag entries. Not one I would take, but it would be a valid setup to go short. So it's interesting you went long there. I can get it. I can see, I kind of mentioned both sides with the shift here and the break and retrace. But yeah, overall, I would say we're going to range or we're going to carry on going down, in my opinion.
What would have been the reason you would be looking for a short there?
So if I were to take a trade here, I'd go short just based off of how we broke this high and immediately retraced. So I guess on the lower time frame, it probably continued. You're looking on the 5 minute, right? Yeah. So I guess you're looking as this is a pullback to go higher, whereas I'd be looking at it as this breaking this high, and this is just the beginning of a move down. So kind of the opposite. I guess that's the thing with trading. You can always look at there's pros and cons.
See everything.
Yeah, it can go. You can really see two different trades here, and there's a lot going for both of them. So I get it. But yeah, overall, I would be net. I'd have a bigger bias to the downside just based on this trend.
Yeah.
Interesting.
No, that's fair enough. 100%. It's also, I think, because at the moment it's very dangerous as well having a tunnel vision on something. This morning we were tunnel visioned on long on pound, even though it signaled to us that it was lacking the momentum to the upside. And I think in this environment, it is quite dangerous, because if you stick to a bias and just keep hitting it the same direction, it's gonna wipe out a lot of profits and can in fact wipe you out. So it's quite interesting you looking at it short. It also gives me a little bit of an idea as well.
Yeah, that's cool. And I like this candle right here. Like this gives me a lot of confidence that we've broken this high and rejected. This is almost like a little ascending here above this high. We've got a strong shift down. So yeah, for me, if we break this low and we don't retrace, I reckon we're probably going to continue lower. If we retrace, we're probably going to range around a little bit longer. And from there, it can go either direction. If it's ranging, you never know which way it's going to go.
Yeah, the places where I'm finding these really, really nice trades at the moment are actual cross pairs that have extended quite far on the day. Let's say 1.5%, 1%, and looking for those very quick retracements back into their ranges. It's a shame you don't trade lower time frames, because I think you'd be in awe at how much opportunity there is on the lower time frames these days.
Yeah, definitely. I can imagine. I mean, what was the one you were looking at before? GA? Talking about flag entries, I think, was it Mike or you in a trade here?
Yeah,
this is literally
trade from...
Don't let him turn you into a degenerate, Griff.
He's not a
don't let him drag you down into the lower time frames.
This for me would be, I don't know if it's a trade I'd take, but this is a valid flag entry as well, and it's even got the benefit of having this descending channel. So like this is This is like peak performance right here. The only downside for me, and obviously on the lower time frames, you're probably not going to find perfection, but these wicks breaking higher shows weakness. And then we also see weakness in this shift down. I'd say that these two candles coming down are quite strong. I'd prefer if it was a bit tighter, if we got the flag up here like this. But by the looks of it, that's doing well. Yeah, that's looking super promising. That's looking super nice right now, in my opinion.
Yeah. Just looking for it to take out that previous high. So the
over here. Yeah.
Yeah, so you've got the previous high in this consolidation at the moment. We're stuck in a range and we're just looking at the top of that range. So I'm just looking.
So you're only targeting here.
Yeah, but I'm in at 1.1. Yeah, 2.11. 2.11. So that's all I'm looking for.
That's such a small move. That's really interesting. Would you not consider holding your trades longer?
No, not really. That's all I'm looking for. High lot size, high leverage, small moves. That's basically all I do on Forex.
Fair enough.
Yeah.
I feel like this could easily target. Could easily go even higher, but yeah, I can see what you mean. This is the first level of like resistance, isn't it? It could easily retrace after breaking this high and come back into a larger range, maybe go towards this low.
Yeah, it can do anything. That's why I say I really only get small retracements from big moves. I never really get big moves. If I get big moves, it's a little bit of luck, but it's normally just 1 to 2 or something like that, and that's it. Get out at the nearest troubled area, which is the 200 EMA. So if I pulled on my chart, it would kind of a little bit of an interest, a different story. Whereas you've got obviously this high.
That's cool. So you're not just going for like a 2R. Sorry to interrupt you. You're targeting the high and the 200 EMA. That's awesome. I tried to have as many different reasons why price would come over to that area. That's great. That's the way to do it. Yeah. So, but the reason for this trade, and this is the same pattern as well, Michael. It's the same pattern that we got caught in. Is this, have you ever seen that kind of consolidation and then a break, and everybody thinks that's already the move, but then price just comes and does something like that, takes everybody out, and then makes the continuation? I've seen it so many times, and that's literally a great example of it right there. And it's such a sneaky move, but if you can start to anticipate those moves, they really are fantastic. Like the GU did it this morning, and I was so blindsided, I was so occupied by it going long that I actually missed it. Like this one, for instance, that's what we were looking at, because I was long somewhere around here, I think it was. My stop was underneath, so that was what the trade looked like. But as soon as it started breaking, I should have understood that there's already a little bit of weakness. But what it's done there is exactly the pattern that I've just talked about. You've got that consolidation. You got that consolidation, the break, which is that, and then comes back in to take all of these highs out to then continue up. And it's an awful, tricky setup. But if you can start to see that and anticipate them, they're awesome to trade with. Pound looks like, funny that, Michael, pound looks like it's actually going to push up again.
Yeah.
Bloody pound.
Gold is going up.
Gold as well. Yeah, gold's been a little bit tricky, isn't it?
Gold is I think gonna go up to around about 330 before we start seeing sells. Yeah. It's doing it very, very incrementally.
Same type of thing. Look, you got all of these highs up here.
Yeah.
All of these highs, 200 EMA. Can't break below these lows. Yeah, I can see it filling up that gap there. The only thing is, it's already quite extended. To be honest,
I think that's why it's just not moving as fast today, because there's just nothing. There's nothing
to really push it until New York
yeah.
opens, probably.
Exactly. Besant's talking apparently. Treasury
Who's
Secretary.
that guy?
US Treasury Secretary.
Oh, that guy.
Trump will personally be involved in negotiations. Japan, South Korea, and Taiwan may be engaged in the Alaska deal.
I gotta say, Traders Connect, Griff, what a copy, man.
How long have you been using it now?
About 2 months, 3 months.
Nice. I'm glad you like it.
Yeah,
You got to convert. You got to convert.
Yeah, I was definitely converted.
Have you you got any prop firm challenges going on?
Last Friday was ridiculous, and I ended up passing 90% of them, so they're all funded now.
Nice, that's awesome.
I've got one verification left. But from today's trading in the morning, it's in a bit of drawdown. So I'm gonna have to be a bit careful on that one.
Yeah, make
Just a
sure
little
you
bit.
use low risk. The reason I mentioned that was because I wanted to ask if you were using the equity protector, setting your profit targets with that.
I've just, instead of the equity protector, I've put it on my drawdown. Because
Nice,
funny,
yeah.
after Friday as well, I got risk limitations added to my accounts. So I've had to put equity protectors on everything just to make sure that.
Yeah, that's good. It's tricky to get the settings right, but once you got it, it's really helpful.
Yeah, goddamn prop firms. God.
Oh dear. Guys, we haven't said it, so we will say it, is AlphaBeta Lab. That is where you can find Alex and I every day. The AlphaBeta Lab. The link is on the screen.
Yeah.
If you're not already in there, make sure you get in there.
Should we do
totally free?
Do a little?
Should we do a little pop up? Go on then.
Do you want to do the new promo though? The one that I sent you on WhatsApp.
Yeah, have you got it? Can you upload it, or do you need me to upload it?
I'll need you to upload that one, mate.
Hang on. All right, just talk amongst yourselves, guys. Just give me a minute.
What about your community? How's that going? Because you and I know you and a couple of other people, you've got your own community, and you've been. How's that going? Like, what do you guys do in there?
Yeah, that's good. Zentum Trading is what it's called. We've got a resilient lot in there at the moment because it's been a slow couple of months. So I think we're building. There's a lot of strong traders in there. You know, you were talking about the discipline it takes to remain patient and things like that. I think we're definitely building a pretty strong foundation. Yeah, it's a great little community. I've just added a Discord bot recently so that people will like level up based on their engagement. So that's been fun. Everyone's trying to climb the leaderboards. So it encourages
we added
competition.
something like that, and then it got abused.
Oh, really?
Abused.
You got to have the right kind of. It depends on the members of your community. If people are going to just gamify it and just jump on it and kind of ruin it, then it doesn't work. But if you've got people who are genuinely into it, then it works really well.
Yeah, I think at the start everybody was just bombarding with Chat GPT stuff.
Yeah,
but then slowly people started putting some really good stuff in, and now I think we've got a solid group that are just really putting in value. And yeah, it's really important. It's quite gamifying things does definitely work.
I agree. Yeah, I was taking a look at your AlphaBeta Labs because I wasn't sure what it was, and it was really interesting. I've never seen a trading community where you pay like what you think it's worth. That's a really interesting concept.
Yeah, I think. Well, God, did I leave that copy in there? I think I.
Is it free? I don't know.
Yeah, it's free
Yeah.
now. I think I left the copy in there by accident. God.
I think I looked like 2 weeks ago, so you might have changed it since. But I thought that was cool. Free. I mean, there's so many trading communities, and it's interesting that most of the ones you have to pay for are just bad. And then the one which is free, if anyone's lucky enough to stumble upon AlphaBeta Labs, they're going to have a great start in trading compared to most people.
I hope so. I think that's the idea. But I think communities in general, like Scruffy Traders community, that has honed in some amazing traders as well. And I think that community is also, it's a paid community, but it's also relatively cheap. But I think it is like, it's when you find those people that say it how it is and how trading really is, and not trying to sell dreams. I think that is the best thing for any kind of newcomer coming in, because everybody that comes in here, even into the prop space, have got this deluded thought that they're gonna come in and like rack it in straight away.
Yeah.
And there's people there like Scruffy and his community that I remember back 4 years ago when I was new to the 5ers. Scruffy was doing some stuff for collaborations with us, and I went into his communities to see what it was like. And I was just, the people there, I was just like, wow, I wish I had this when I was starting, because it was just super down to earth, small risk, consistent, and
he doesn't. And the other thing is, Scruffy doesn't suffer fools. So if you go in there and you haven't got the right approach or the right mentality,
he would just get
even as a paid subscription, he doesn't care. He'd rather not have your money as a subscriber, because he doesn't make any money from the subscriptions. He just does it as a kind of a gatekeeper to make sure that people have some skin in the game.
I love that community. It's a very good community. But I think those communities these days are super important, especially with like how everybody is now, at home or doing things alone. Having places to go and communicate with other people is the game changer.
Amen.
It's
to that.
difficult to
Amen
find
to
those
that.
authentic communities, though, isn't it? Because, like you say, a lot of people are selling a dream, and that's how you know to kind of steer clear. I've seen more and more of these influencers doing YouTube videos and Instagram reels and things where they're wearing like, ridiculous sunglasses and, making 10K, losing 10K. And it's just like these really spammy, awful videos. And if they have money, it's not from trading. Trading is a realistic secondary source of income, as opposed to make millions real quick. You know what I mean? There's a difference between gambling and like just proper 2% a month trading.
100%. I think we've had this conversation quite a lot as well. It's like trading is so good having it on the side, and it's so much easier to trade when you've got something consistent that is bringing in the money for your bills and stuff. Doing it on its own, that's a tough old gig.
Hard.
I think
It is hard.
Yeah.
But with that in mind, guys, check this out. How about that? How about that for an
super
advert?
loud? Actually, my speakers was on loud, blasted, blew my eardrums. God
Sorry, guys,
damn it.
if we've deafened anybody in the audience, we apologize.
When does it come to cinemas? It's like a proper movie
Yeah.
trailer. That's awesome.
God,
It does, LJ, doesn't it? It looks good, LJ. It does look good. So yeah, if you haven't already joined the AlphaBeta Lab, get on in there. That's why Alex and I are here. This is the AlphaBeta Lab kind of takeover section of the 5ers stream. So come join us. We've got our daily streams as well on YouTube, so you can find us there as well. But we'd love to see you guys join us.
Seems we make more money on the 5ers stream actually. So join the 5ers stream.
5ers stream we tend
London
to be
Open.
more serious.
Yeah. No, London Open. It seems to be our sticking point at the moment. Maybe we should just cut trading London Open and just leave it maybe for a little bit later in the day.
That's an interesting theory.
Very good idea.
I think with London Open, quite often the best thing to do is take a trade in the opposite direction of what you actually want. I think that works great. And then New York, it'll go the direction you expect.
Do you know what? That's not actually bad advice.
It's so true.
Solid
All
advice.
the time, I see London Open trades tag you out, and then it goes in your direction. Happens every time. It's like a little manipulation session. I don't know what happens, why it happens, but every time it takes out your stop loss and then goes in your direction. It's just the London session. It makes me feel bad to be an English guy, you know.
Oh man, that'd be the only thing. We do have. No, I'm not gonna say it. Not gonna say it. Go on.
Sorry, Void.
Yeah,
Sorry, Nick.
Sorry, guys. What are the good things about England, though? If we really,
No, let's not go into that now.
That triggered you.
there are some
Alex
good things.
Alex is going to go into this because he doesn't live in England anymore.
No, I know there are some amazing. The countryside, beautiful. English countryside on like it doesn't. It can be a cold day, but it's just blue skies, a little bit of frost in the morning. Mate, that's where dreams made.
Vibes.
They're beautiful. Fish and chips. There you go. Fish and chips.
Yeah.
Banging.
Yorkshire puddings.
Yorkshire puddings. So that's something that I don't get around here.
You know, you can make your own.
Yorkshire pudding.
Yeah.
No, mate.
You can.
Really easy to make your own.
I don't know about making my own Yorkshire. It's a bit.
Alex doesn't want to have to make it. Alex just wants to be able to eat it.
That's very true.
A friend of mine who's from the northeast. He's from near Sunderland. He makes them himself. The puppy's right though. Louis right.
You know what though? It isn't that. Okay, this one's better than the pub.
Salt and vinegar crisps.
Salt and vinegar crisps. Yeah, mate.
No, you know what's best? Salt and vinegar crisps at the pub.
Too right.
We've got such a drinking culture, you know. Everybody around the world just thinks of like, I say I'm from England, and oh mate, what? And I'm like looking at them like, oh, this is another one.
Cheers.
You know the thing is that there's this perception of that, but actually in the UK, they're like compared to other countries, like Poland has a drinking problem. Right. Right.
Yeah, but that's a bit too real, isn't it?
That's like extreme, right? You know, there's drinking problems. You know.
Yeah, there's like fun drinking problem, and then there's like drinking problems.
Exactly. But if you look at the alcohol industry, all of the breweries, all of the alcohol producers are moving into non-alcoholic drinks. Because more and more people are just stepping away from it anyway. There's like a really big market now for non-alcoholic drinks.
Yeah.
Like Jonatan, Jonatan the other day was sent us a message and he had a beer can in his hand. It was a non-alcoholic beer. It's because
I think there's something super social about going and having a beer with your mate. And it's like you may not actually enjoy alcohol. You may in fact like dislike the feeling that alcohol gives you. But you enjoy the fact that you're going out and being social and having something in your hand and being able to talk with your mates. And I think that's very difficult for a lot of people when they want to stop drinking is that part. And I think that's what it really like the non-alcoholic beverages that look alcoholic kind of do that for you. It's quite interesting.
Yeah. Louis, no. QPR.
Manchester United.
QPR.
Birmingham City, yes, great. You know, if
Birmingham City
pinnacle
League
of
One
English
fodder
culture
right now.
Yeah,
QPR. It's not the problem of drinking; it's how they behave after drinking. Well, that's everywhere. That's universally around the world, Louis. I'm
Yeah.
afraid.
I took my younger brother to. Had a family event in Germany, and we went to a club or a rooftop bar, and you can take the lad out of England, but not England out of the lad, because he was going up, grabbing, you know, like, oh mate, oh, where you from, all it, and I'm like, Charlie, people are over the age of 35. They do not want to be touched. You don't want to be touched at that age. You don't want a lad 25, like 23, putting their big hand on your shoulder, being like, "Oh, mate, where are you from?" Nobody wants that in Germany, you know. So that ended up being an interesting night. Definitely,
give him some life lessons.
I tried to, but he ignored every single one of them. That's what happens when you're inebriated.
Youth of today.
Oh, God.
Youth of today. I remember back in my day, didn't have that kind of problem.
Oh, back in your day.
Back in my day.
What else are we looking at in these markets? Because pound is not doing anything.
I'm only looking at gold, but I'm waiting for gold to come to an area of interest for me. I'm not going to chase it. Not going to chase it.
What is happening in this? What is pound yen doing? Ooh, what's pound yen doing, guys? We got like a little bit of a range. Oh, we got a little bit of action.
1 minute chart action.
Probably not to trade it.
To go which way, long or short?
Long. Yeah, look at that. 4 hour demand. 4 hour demand. 15 minute. You know, it's 1, 2, 3, 4 times try to push down low. Couldn't. Wow.
Ooh.
You tuned in at the perfect time.
I know. Yeah, I know. Bloody hell.
You just had a sixth sense. You clicked on GJ and it's moving.
What did you do, Alex?
Did
you click something? Click something that you weren't supposed to click.
No, but that's the thing. I was just clicking through all the things, and it just
my crypto portfolio next.
Oh no, you don't want me trading you.
That'll go straight up.
You don't want any signals from me with that.
No.
Actually, signals, yeah, but trade management. Wow, I've rid my portfolio back down for the 4th time.
Oh no.
Interesting that though, isn't it?
Yeah, that's just out of nowhere.
It just looks primed. What would be the trade then? So if it would be, let's say, something like that back onto the range, onto those EMAs, taking out all of those highs with a stop underneath the low, and that would coincide with these highs being taken out and a 200 EMA, boys and girls.
You are talking about trading GJ though. Just to be clear.
Something
true.
I've never played in my life.
Got to consider the J in that. Pretty volatile.
But look also where that goes on the 1 minute, on the 1 hour. You know, comes back, hits that 21 EMA that at the moment we've deviated away from. Oh, gosh.
I'm not saying I can't see
Are
it.
doing it? Are we doing it?
Oh, Alex is going to do it, isn't he? Oh, God.
Are we doing it?
Oh, dear. Oh, dear.
What'd you risk for trade, Alex?
I'm lowering it now. Now I can't. Now it's a maximum of 1%.
Okay, cool.
And not through choice.
And not through choice, no. I tried to argue my side, but
Alex ran into their Discord and kicked Mary hell off and just said, rah, 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 can you destroy me? My
you guys
wrist.
manipulate the spread. Rah, rah.
Let us know if you end up setting an order.
Let's Griff knows how to tempt me, doesn't he? He knows how to tempt me. He knows how to do it.
It's coming back a bit aggressive. I don't know. I'm not gonna say anything else.
Guys. That is exactly what we want.
I'm not gonna say anything.
Let's do it. Let's get in.
Hang on, are you
Trading
doing
to
it?
1 minute's crazy.
Are you doing a limit order or are you doing?
I'm gonna. Oh mate, just
a market
look at
order.
it, though. Honestly, I'm gonna put it up.
Alex,
Hold on. Sorry. Why is it coming back down?
why is it coming back down? Hold your breath, boys and girls.
Oh, yeah, I gotta do the risk. Where's my calculator?
Damn, 1 minute. 1 minute is stressful.
Divided by 17.
This is professional trading, ladies and gentlemen.
This actually is, you know, I'm actually working out my risk.
I know, that's what I'm saying.
Nearly hit 15 lots there.
I know, I nearly hit 15 lots. That
That would not be good. What would that be? 10% risk.
No, I can't. This is.
He's limited at 1% now.
What is this thing? Yeah, I'm just gonna market order this thing. Gotta spread his crap. 400.
Wait, so you've done a market order instead of a limit order now?
Yes, Griff.
Why?
Why? Because I just didn't want to mess around with this little risk to reward button, and I don't mind getting in because the momentum's on my side by the looks of it.
Yeah.
So that's what the trade is looking at.
Exciting. All right. I'm excited to see how that'll play out in the next 18 minutes.
Yeah.
While I'm still on the stream.
Why 18 minutes? There better not be any news, mate.
No, that's just until how long I'm on the stream for.
Okay. So we're gonna do that as well. Bam. We're gonna do this. Bam. Okay.
I feel as though we need, like, you know, one of those kind of memes that says, what could possibly go wrong?
What could possibly go wrong? See, look at the size.
correlation.
Look at the size that we're bloody traded now, you know? What is this?
It's good that they're both aligning the pair correlation. That's a good thing.
GJ's fast, huh?
Yeah, it does move like that. But then I've seen trades like this where it can just reject so quickly, like it's doing so now. To be fair, like it and you'll like to hear this. When I trade the JPY pairs, I have a much bigger tolerance for an aggressive pullback, and obviously this is the 1 minute, but like that has pulled back super aggressively, and it's because it just does that. It tags
On
you
the
in, and then it
on the
just
618, I should have look at how much I left on the table just not by getting in at the 618. Go on, boy.
nice.
Just watch it play out. I'm in a gold buy at the moment.
This shouldn't be so exciting. You're giving me
I know-
a whole
you
new
know- you
perspective
know what
on
that
trading.
It is. This is why we trade probably so much, because it is exciting, and it
Yeah.
shouldn't be like this.
I don't
It
have
shouldn't
any of
be
these
like this.
feelings when I trade. This is like a
No,
whole other
it
game.
It is fast, but to be fair, the 618, that was literally the perfect entry, and I probably left out. You know, could have got back in for. Could have. If it was a lot size, it would matter more, really. But it was $10. Could have added on to that, or maybe not. No. Whatever.
Nice work. You got two nice trades on the table.
Yeah, I think the pound. Well, it's practically the same, really, aren't they? They're just betting on the pound recovery a little bit.
Nice work. Two winning trades. There's very few times where I'm in two trades at once. Never mind two trades that are in profit. Because I just have so few trades.
Yeah, I'd love to say that this is a common thing. No, I think normally in the Fiverr streams, Michael, we're actually we get into much better trades.
We
should cut out London Open.
Yeah.
What was it? Henry said we shouldn't get out of London Open. Just wants we need to do Silver Bullet or something. Was it he said?
Silver Bullet.
I don't know what Silver Bullet is.
That's Silver Bullet
strategy.
Oh, is it ICT?
Silver Bullet to a lot of other people is something totally different.
Here's my chart. For who was it? M76 asking. So I am in a long at the moment. I'm not sure if it's going to hold, but I think it might. Got in at 309 there. The stop loss there. Take profit up here. Up there. That's my long on gold right now.
Nice. That would be a huge trade if it plays out.
Nice 12R.
Yeah, looking good.
On that,
Alex isn't happy.
What's that on a 4 hour? Where's that targeting on the 4 hour?
Targeting up here.
Do you know what? With a bigger stop loss, that's not bad. I wouldn't say that's a bad trade. With a bigger stop loss.
Doesn't need a bigger stop loss. If you catch it at the right moment. Catch it at the right moment, it's absolutely fine.
My best trades have a very... Do you guys know what MAE is? Maximum Adverse Excursion. Have you heard of that before?
I've heard of that, yeah, definitely.
Yeah, so it's just... Yeah, it's just the bigger... It's just the how many pips a trade pulls back before going into profit. And my biggest trades literally have an MAE of like less than a pip, which is crazy because it happens all the time. It just barely tags me in and then goes into huge profit. So it actually makes sense. If I reduced my stop loss to like 3 pips trading on the 1 hour time frame, like I would, sure, my win rate would be absolutely terrible, but my winning trades, my best trades would go from like 10% profit to like, 30-40% profit immediately. And that's why I use a 10 pip stop loss, which is quite small, I think, for the 1 hour. But it's because I know that losing trades, like winning trades rarely pull back more than like 5-6 pips for me. And I made a cool chart showing that, that's how I found like the optimal stop loss.
Is that on GU and EU?
On GU, it does pull back a little bit more. So on that pair specifically, I use 12 to 15. On my other pairs, I use 10 flat most of the time.
I used on GU and EU a 10 pip stop loss.
Oh, cool.
Yeah.
That's interesting. Yeah, so I'm using on the 1 hour the same stop loss as someone trading on like the 1 minute, 5 minutes. So I guess it does show that I'm using a relatively small stop loss. Well, I don't know. Maybe you're using a relatively large stop loss.
Yeah, it just goes off market structure. It's funny because if you have a look at just the average pullbacks and retracements and things like that on these assets, they are relatively the same. Obviously, maybe a few pips here, a few pips there. It's when they go out of that range, it's like an indication of something changing. So like when like the average pullback of a move on GU starts, increasing, and maybe it's time to, to change directions or whatever. So it's like the market structure for a 10 pip is relatively, it's always like the stop ends up underneath a low or high anyway. So
this is an interesting thing, actually. I'll see if I can bring it up in my browser, and then maybe I can share it with you guys if you're interested.
Yeah, that'd be really interesting to pull up on. White House Council of Econ Advisors. Why are they talking now? Like, why is anybody talking now?
There we go. I found the file. I think I've shared it if you want to look at it with everybody. So yeah, this just reflects MAE up the left, which is just the amount a trade pulled back before going into profit, and then on the lower axis is the profit of the trade, and you can see a correlation where the smaller the MAE, the bigger the return. So in general, you can see there is not much point in me having a stop loss bigger than about 9 pips, if you can see that reflected on the chart, because most of my trades, winning trades, don't go further back than 9 pips. So considering that, I use a 10 pip stop loss just to account for spreads and things like that. And you can see along the bottom a bunch of different stop loss sizes, the win rate with those stop loss sizes, and the overall return. So you can see technically about a 7 pip stop loss would be optimal, but that win rate is just would be too difficult, like psychologically. So for the sake of my psychology, I go with about a 10 pip stop loss. And yeah, you can see the biggest trades, I've got a couple trades above 10%. All the trades over 10% didn't pull back more than 5 pips. Most of them didn't pull back more than 2 pips. So yeah, that's just an interesting insight.
That's a very good insight as well, because let's say you're putting your stop loss I don't know, 15 or 20 pips away. You can basically pull in your stop loss now to a better average and put more, get more on the trade. You're adding more volume onto the trade anyway by pulling in your stop loss. So that's really, really important. It can add a lot of money to your account by doing that.
Yep.
Fantastic.
Just gold looking nice.
Yeah, gold. Wow. Wow.
You guys have the magic touch today.
Oh gosh, don't say that. My girlfriend.
Okay, no, it's going terribly. It's going terribly. I'm not going to jinx it.
No, let's see, Griff. Stop saying that. Say we're doing good. We're doing good.
You're doing good. You're doing good.
Great.
You're doing good. You're doing great. We're doing.
You see, after each of these live streams, I go to my charts and I'm like, wow, these are looking good. And then I'm like, oh, I'm on the 5 minute.
Yeah.
I can't go back to the 1 hour.
Or you're inverted. I keep forgetting my charts are inverted.
Oh yeah.
And then I go in, I'm like, oh yeah, this looks like a really good short, and then it's actually like a total is like a long. Nice. What is going on with this GA? Who calls it GA? What is it doing?
GA.
Oh, look at that. Here we go. We've got something coming in. Hold it, boys. Hold it.
There we go. Go on, gold.
Is it pushing? It's pushing up.
Go on, gold. Look at this.
Ooh, it is pushing up. Ooh.
Nice.
Look at it go.
What a crazy trade, Mike, with the tiny stop loss.
Yeah.
This is enough profit for like the year. if it hits TP, you're good for the year, basically.
Yeah, if only I was on a live account.
Practice makes perfect.
Yeah, looks good.
This is what happens if I mark my charts out and look at it properly and carefully, and I analyze where's the liquidity and what the zones are worth looking at. Now it has started. This doesn't mean that gold is long. If anything, it means it's short.
What do you mean?
No, as in no, on the higher time frames, time frames, because it's opened up this candle on the 15-minute without a wick, and it started with a 1 minute double bottom. So just here, that move there.
Yeah, it all just depends, isn't it? It all just depends what time frame you're looking at. Like some people say, it's short, but if you're looking on a 5 minute, the momentum at the moment is on the upside.
Yeah.
We're having a nice retracement down onto my entry. Let's have a look. Let's have a look on the 5 minute. This is still nice. I can still see we got a nice level. Got a nice level here. That it will be still in play, even though it can come onto that and a retracement up. Let's have a look on pound Aussie dollar. Gonna look on the 15 minute. Same thing. My entry is like a nice level of support. The only thing is that we are stuck, you know, at the top of a range. So we're all concentrating.
I'm just watching my gold. I just
you know there's funny times when people are streaming, when everything's quiet, it's either somebody's losing their ass or they're deep or they're like deep concentrating on a trade. I remember there was a couple of, I think it was last week, and we were in a stream and we were just quiet the whole time. And I was just looking at the trade that I was in.
It was it Thursday? I think it was Thursday.
Yeah, LJ had to come in and just talk because all of us we couldn't even concentrate. Like
Alex and I was like,
we're like, oh yeah. So we think GU is potentially long, but you know.
There we go.
It's either you're in great winning trades or terrible losing trades.
The thing is, when you're in it, when price is already pushed off and it's far away and it's moving, it doesn't matter. You can just concentrate on, you know, on that. But when it's like fluttering around your entry, or you're in deep drawdown, it's like nobody speak to me. I'm not doing anything but this.
You know, I've got a question for Mike actually. How come you've got 11-minute and 22-minute time frames? Like, that's quite interesting. 11 hours, 22 hours. What's that about?
Because I look for candlestick patterns. So I look for engulfing candles being tested by other engulfing candles. And I look for liquidity levels as well. And liquidity levels in particular are inside bars. So if I take it to the 11 hour, for example, more often than not, on the 11 hour in particular, an inside bar will be created and then an engulfing candle will be created afterwards, because an 11 hour isn't actually the 11 hour. It's 2 11 hours and then it's, I think it's like 2 hours, the last candle of the day. So those last, it just gives you a very different perspective on the charts that you wouldn't see otherwise, because everything else is 5, 15. It's all multiples of the hour system. Whereas if you step out of that, then you get a very different perspective on what the charts look like. And it can often give you areas of interest that you wouldn't see otherwise. So yeah, it's
wow, that's really interesting.
If you look at the 5 minute, for example, the 5 minute doesn't necessarily show you anything, but then you take it to the 7 or the 11 minute or the 22 minute, and they just give you different perspectives. For example, this 22 minute was one of the reasons why I like this trade. Was you had this candle here. Let me just mark these out easily. So you had this one here on the 22 minute, which was pushing up. It took the bodies of these two and it tested the wicks, which were both let's call them bullish candles for the most part. The high was then taken and price tried to push back down, but the wick got rejected, so carried on going up. Price then came down again and tested into this wick, and it's now created this engulfing candle to the upside as part of the move. So it's just, sometimes it's trying to find the confirmations that you want on your strategy, and sometimes you got to look at something a little bit more abstract to see your edge, you know, to try and find it and spot it. And it works. sometimes there are, I can't explain it, but sometimes price reacts literally to the cent on some of these liquidity levels, and it's an 11-minute inside bar or something. So yeah.
That's really cool. Thank you.
Great British Pound AUD. Let's see what it's doing now. Pound is seeing a bit of weakness. Let's have a look.
I'll be monitoring these throughout the day now because I've got to shoot off in a second. So let's see how the trades are doing, and then I better go. And then I'll be watching from the.
You're gonna look later, before you have your tea and stuff, and you're gonna look at the charts and be like, "Oh, there you go, Alex Trader's hit." Always actually hit your stop loss. One of them.
I'll be thinking of your TP as well, Mike. Hope the trades go well, boys.
Yeah.
They're looking good.
See you later.
Cheers, Griff. Speak to you soon, mate.
Thanks, guys. See you. All the best.
Right. Gotta love having Griff on, guys. Gotta love. Oh,
Griff's brilliant. One legend replaced by another.
Boom.
Yes, it's always great to have Griff on. I enjoyed it a lot when we shared the same time slots. Unfortunately, that's not always possible, but Griff is awesome.
Victor, you'd be proud of me. Look at this trade.
What have you? What pair is that? That's gold.
I'm buying gold.
Ooh.
That's a Victor trade, surely, isn't it?
Let's look at it. Straight trying to find out what your almost, but yes, it looks very, very good. I like how you were. Where did you get in? Right where the indicator is set?
Yeah.
There you got in.
Yeah.
So right where the indicator set is, right?
Yeah.
Yeah. Did you get in with a marker, or a limit?
Market.
We've seen a nice little bit. We've seen quite fast spikes as well on yen.
That's the. Go ahead, Alex.
No. Why? If you know something that I don't know, tell me.
So your entry, Mike, that's the retest of a fresh order block, and you got that's the that's price coming in, reacting on that order block, giving you the sign, and it gave you a second entry when it wicked your entry the second time around. I sometimes, if we have enough confluence, I would have another entry there, because it's telling me time over time, yes, I'm gonna do this move, I'm gonna do this move, I'm gonna do this move. And these are the good ones, when the market is not only telling you once and running away, but it's actually in your head telling you abstractly, as the market sometimes tells you, Mike, that it's going in some way. But go ahead, Alex. Did I take away your flow?
No, mate. I asked you. You said something. I thought you were going to tell me something. You said, "Doesn't matter. It's okay, mate. You do you."
No. I was gonna say something about what I did. So thank you for allowing me to do that. You're such a nice guy, Alex.
Thank you very much. That's £10, please. I'm nice for free.
It's £10 for him to compliment you.
Yeah, you figure I let you be nice for free, like free favors. It's not the right stream.
All right, so gold. I was gonna say something about gold before we. Yeah.
Isn't it annoying that we have to change the chart each time? Where I wish that they could just do like all of our charts
at the same time, right?
What do you mean?
Yeah. Everybody can see our charts all the time.
It's another StreamYard limitation.
Yeah.
And it should be like all of them, and you can maximize one and minimize the other one. That would be awesome.
That would be.
Imagine.
Like everyone. Everyone can
almost
watch
feels like
our screens constantly. Wouldn't that be
almost like
great?
we need to have streams within a stream.
Exactly.
Wow, we could have a stream party. You could show me your stream and I'll show you my stream.
This sounds like it might need to be a business idea.
Oi, look at that. Oi, 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 oi. What's going on? That's a little bit too fast for my liking, boys and girls. I don't like that. That's too fast for me.
Ooh.
And Alex likes to go fast.
And I, whoa. Whoa. That's too fast for me.
Pound yen, that is, and what's the other one? Pound Aussie. Yes.
Yeah.
Those are the two most volatile. One of the most volatile pairs out there.
Oh really?
Yeah.
Nobody want to tell me that beforehand.
Why would we want to do that? It's far more entertaining to let you find out yourself.
So yen is clearly out. Yen is clearly out, unless I'm saved by any type of trading god that is out there. Looks like pound is getting a bit weaker. Let me have a look on GU.
Someone said there is some kind of an event in the White House with some economic advisors.
The US Justice Department has disbanded its national cryptocurrency enforcement team.
Yo, we're up, and then I look at my bag and no, we're not doing anything.
But Bitcoin's up 1%.
Donald Trump replaced the US dollar with Dogecoin, and Dogecoin and crypto does not do anything. It is a bad sign at the moment.
To your solace, Sol is 4% up. I believe that's part of your bag, right?
Victor. We're talking about crypto. 4% is practically a losing day. It's practically broken, Is it? What's it doing?
Looking at the, I'm gonna go check the two pairs that you've been trading, the two charts you have there, to see if I can make anything out of it. Okay. While you're watching it, I will be
one's out.
Background.
One's out.
Took you out?
Yeah, one's out.
Okay.
Pound AUD is long still. I think it's our time to go.
It is. You guys have got Deanna joining you in a minute. So Alex and I shall bid you farewell. Don't forget to come and join us in the AlphaBeta lab if you haven't already done so. We look forward to seeing you there. All right. Cheers, guys.
We have a see you guys. We'll have an intro as we have Deanna coming in when she tells us that she's ready for our next section. Section. Actually, let's go right into it. Awesome. Whenever you are ready, Deanna, we are. Oh, you are. So let's bring you on to the screen. How are you doing today, Deanna?
Good morning, Victor. Good to see you. Not morning for you. I always say that, but I'm doing well.
Good morning to you.
Pardon me?
I said good morning to you. You've come in and our day has brightened up.
You're always so sweet. Thank you. Good morning, Marina. Hello, Vinicius. Good to see everybody in the chat. I barely got to see you yesterday, Victor, so I'm excited to hear how you're doing, how your week has been.
Good. I would say this week is very. How would you say? It's one of those you want to. You don't not only want to. You're going to remember, even if you don't want to. I mean, that volatility is one that goes. I'm sure it's gonna be in depending on how much experience one trader would have. It's certainly gonna go in the top 3, top 5. Most volatile periods. A couple of days where the ranges were insane, where the news was exchanged with fake news or mock news, and then we got the real news again, price going everywhere, and in a wild way. So yes, I would say, but my week has been great to be coming back to what you were asking. Actually, these days like these, I trade less. And even though the market is faster, I become slower, right? Okay. It's something that I automatically do. I wanna the faster the market is, the more time I need to make sure that I'm doing everything okay. So it's exciting to see, but my trading isn't it's not like I'm gonna start shooting left, right, and center when the market goes berserk like they're doing right now. So
yeah, that's a good policy. Good morning, Harish and Henry.
Yes, we have many regulars coming in, and many of them very waiting for you, for Deanna to come in to help them out, to help them straighten their habits into straight good habits in trading. There you go. All right.
That's so what we're all working on, right? Hello, Abdullah. Thank you for saying hi.
It's the ongoing process, right? We're things like habits. It's something that's never gonna go away. As long as you're alive, you're gonna have habits, and as long as you have habits, they have if they're not good yet, they have you still have to work on them. And even when you get them into the right spot, right routine, everything else, you have to maintain them, right? They're not gonna go away, and they're not gonna. So it's something that needs refreshing and reminding for as long as you live, to keep them healthy and productive and not harmful. So I think that's and they're so powerful. I mean, habits are building blocks of our lives, basically, right? We do a lot of things with a very high percentage that would be of our daily activity is built up of habits, things we don't really think about, but sometime in the past we decided consciously or unconsciously that we want to be doing this way for the time to come, and that's basically right, those habits, and they're not necessarily good for us. So it's a very interesting topic, Deanna, to tap on from time to time.
That's right. That's what trading's all about, right? Is just doing the right thing over and over and over again. So hello, Lewis. And actually, Victor, it looks like somebody has a question about gold, looking for a short in gold.
Yes, I saw that too, and I was gonna started doing some. Let's do some analysis, because gold is popular.
Yeah, I'm excited to hear what you have to say on this one, because it's great when you have your own trading style, but it's awesome to hear other people's as well. And sometimes it's conflicting, and sometimes it might be aligned. So I'm curious to hear what you have to say. So, what you got?
Okay, so no pressure on me. Okay.
Well, there's no right or wrong answer, right? It's just how you frame it. So, so no pressure. We just are excited to hear your thoughts.
I know. It's I'm just kidding. I like to play around sometimes. All right, so this is gold. As we always do, let's start from the higher time frames. There isn't a lot to say or to remark on it, other than we are just very, very bullish. Bullish structures are barely getting retested, but all of them are successfully, if they're even retested, they're successfully retested. And the structures are, predominantly bullish. No surprise there, nothing really there. So let's move on to the weekly time frame. The weekly time frame isn't much different, right? The only structure, the last structure we have on the weekly is this order block, this little fella here, which was within another one. But not the bigger one got retested, but that's it. But that's far away. It's already been mitigated. So that's not something we can currently use, and it's so far away. There isn't anything to see. There isn't anything to act upon. It's not actionable. We're not there, and it's already mitigated. If we see, so based on the raw, basic, rudimentary price action, seeing at the candles, it's still very, very bullish. We're still in an upward leg. Don't forget that on the weekly time frame. So it does make sense. Even if on the lower time frame we see some kind of reversal, market break it down. On the weekly, there's nothing happening, and we know if price has to transition. Price action has to transition. So as long as the higher time frame are not transitioning into, they're not starting to break down, you got to be careful going against these higher time frames. So whatever you do, be aware. Don't be too ambitious with your, even your daily targets, because the weekly is just very strong and is firmly bullish still, even though we have a pullback, and which we're going to be talking about next. So let's go to the daily. So the weekly doesn't say anything other than we're obviously very bullish. The daily, what do we see? We do have a break of structure, right? That's the neckline that makes this the left shoulder, the head, and the quasi being activated. Those are my words. To me, now is the quasi has been activated. Now I'm going to be looking for that potential right shoulder, right? Because we broke structure, we can expect perhaps a continuation of that move, right? It breaks structure, it pulls back, and then continues with this impulsive move from the top to that place where I have the cursor. So that's the idea, the general idea on the daily time frame. We do have a break of structure, and it's interesting, but to try to identify if this is going to happen. Where are we? Where is the best place to catch that short from? So we have the break of structure and a possible right shoulder with no entry order block. And Hamed, is Hamed with us today? Hamed was in this morning, I believe, but are you still with us, Hamed? If you are, show yourself. No, if you are, if you are, just let us know. And if you're not, it's fine. We'll meet together soon. Since you're a regular, we'll bump into each other soon again. But you were asking, Hamed, and maybe some more people in the audience, isn't this an entry order block or an order block in general, right? And I saw that question yesterday, but I was waiting for the right opportune moment to talk about it, because it's a real thing. If you are in doubt whether this is or isn't an order block, and the order block is an essential part of your trading strategy, you're in trouble. How, if this is something, if let's say you use order blocks in your trade plan, but you're not sure in these borderline cases, if it is, if it isn't, what do you do? Right? And Hamed, I'm not sure if Hamed actually uses the order blocks, but it doesn't matter. Point is, let's decipher, let's break it down and see if this is an order block or not. And it's very, very, very simple. So simple, anyone can do it. My grandma can do it. Both of them.
That's so rude. So offensive. Poor grandma.
No, I mean, she is in the 90s. I mean, it's not as, I love my grandma.
I'm just messing with you, Victor. It's fine. I'm sure she's fine.
So, all right. So if this an order block or not, the definition or maybe I should say a child, a 5-year-old child can even do this.
That's probably better.
I'm gonna remember this, Deanna. Thank you very much. I appreciate your tips. So this is so simple, right? We have the open, the high, the low, and the close of each candle. And the definition that I use for order block is this: bar number 1, bar number 1, and this is bar number 2, right? The definition is objective and simple, thus powerful. If in a bullish or in a bearish order block, if bar number 2 closes below the open of bar number 1, you have an engulfing, thus you have an order block. Simple. You got to know the close of bar number 2, the open bar number 1. So let's go in and see if this is an engulfing or not. Right, this is the let's mark this down. This is the close. Actually, let me use a bigger, a bit more thicker. There we go. A thicker line, right? We go in, and this is the. Let's see. This is the close of bar number 2, and this is the open of bar number 1. Very simple. We do not have an engulfing, thus we do not have an order block. That's it. And when you see it on the charts, it's gonna be difficult. But you don't have to zoom in with a microscope like I did. The only thing you do is just hover over it, and you can see in the left upper corner the open, the high, the low, and the close. So you compare the open here, which is 3114.1, with the close on the other bar, which is 14.27. So there's 26 cents higher it closed than it needed to be in order for it to be an order block. Simple, right? Mm-hmm. Even a 5-year-old can do this.
It's really a totally objective way to
exactly.
Mm-hmm.
And that's the, I think that's there is so much power in simplicity. Yeah. And look what we just did by having such an objective rule. The doubt vanished. There's no doubt. It is or it isn't. That indecision no longer an issue. It isn't an order block. I'm not going to act upon it because it's not there. There's nothing to do. I just continue. That means that on the daily time frame, we don't have an entry order block on this quasi, right? The left shoulder, the head, the neckline being broken. But where is the entry order block? We don't have it. That to me is it means that I can't do anything with the daily order block. We don't have a break of structure. But it's not tradable, it's not actionable. So let's continue with the lower time frames.
Can I interrupt just for a second with a question? So somebody mentioned in the chat, what about the wicks? And I think you said last week when you're looking at inside bar, outside bar, that you do use the wick, but when you're determining the order block, you do not use the wick. Is that correct?
Exactly. That's exactly. Well, the order block has two definitions. One is if it's an engulfing or if it's an outside bar. And with the outside bar, you need the wicks to be outside of the range of the previous candle, but also the close, right? So you do have to have both wicks taking out the extremes of the range of the previous candle. Right, so they are important, the wicks, in the definition, but the close when you're talking about engulfing, the close of bar number 2 is compared to the open of bar number 1. Right, that's for the engulfing, and for the outside bar, it's taking out each side and then closing outside of that range. I will show you all for what is an outside bar. We have this question quite often. So an outside bar, right? That's another. So both of them can create an order block, right? Order block can be created by both of them. And this is the bar number 1 and bar number 2. As you can see, it's not an engulfing, right? An engulfing is where you have opposing colors, right? Opposing direction, bullish, bearish, or bearish, bullish. In this case, they're both bearish. yet it's an outside bar. What is happening here? What's the definition of an outside bar? The high of bar number 1 and the low of bar number 1 is taken out on both sides, right? With the wick, and it closes outside of that range. That's the definition of an outside bar, and this is very, very powerful. When you see this, typically you see an acceleration in that direction of move, and that's exactly what we did. This is so simple yet so powerful. So that's the outside bar, and this creates an order block as well, as you can see. So we let's go back to the analysis. So now you guys, everyone watching, you guys know how I draw my order blocks, engulfings, and outside bars, and very objective rules for each, right? So there's no doubt, the same thing that I just mentioned or that I just did with the engulfing, there's no doubt in this instance if it is or it isn't an outside bar. You just look at, you can read the high and the low and see if it closed below that low in this case. And if it did, even if it's a couple of pips, doesn't matter. It fit the definition, and so it is an outside bar. All right, so let's clean this up on the H4. We're looking at gold. Yes, we are, Abdullah. We're currently looking at gold. So let's see. How old is your grandma? She is 93. This year, so she's 92. She turns 93 this year, and she's so sweet. I love you, Grandma. If you're watching,
at least you got a shout out. Don't watch the beginning, Grandma.
Don't watch the beginning, but I love you a lot.
Oh, that's sweet.
Right. So, okay. So the H4. H4 order structure. Remember, we had the daily breakup structure, but no entry order block. So there's nothing actionable, but we still have information, even though it's not a daily signal in progress, because there's that lack of order block to enter on the daily time frame. It is telling us something. The daily is breaking down. It is forming a quasi. It is a reversal pattern. So there is a little bit more weight on the H4 telling us something. If we go to the H4, what do we see? Using the same rules, objective rules on the quasi as well. We have this as being the neckline, the left shoulder, the head, breaking of the neckline, going not into an order block because there isn't anyone there. Actually, I should make that a quiz. Is this an order block or not? There we go. It isn't. Look at that. Right? It isn't. That's the open, and the close on bar number 2 isn't right there. So we don't have an entry order block. What we did have is the creation of that order block, which is created by the outside bar that we just used in the example. And price went much lower, and this quasi is still at play. What do I mean by that? And maybe I should mark the quasi. It's what do I mean by that? Let me see. We do have. Where is it?
We have a quasi in its natural habitat. We have a quasi in its natural habitat.
Is that your ringtone on your phone?
It isn't, but it could be.
That would be a good one.
Yes. I'm sure I'm walking down the street and I would be the only one laughing. All right, let me see. I changed the background music. Where is it? There we go. This is the one that I really like. Okay, so coming back to the quasi pattern. This quasi pattern still has that's the head, as I said, on this time frame. That is the this is the head and the left shoulder, but this whole quasi pattern is still at play. And why do I say that? The fact is that you can't know just by the fact of the break of structure. You can't know how big this structure is. Sometimes it comes back within just a couple of bars, and other times it takes many bars. sometimes 20, 30 bars, 40 bars before it comes back for that meaningful pattern where we can get an entry to capitalize on it. So one of the ways that I do is I take the retracement tool and measure the extremes of that news range that is being created, right? Where the top is the head and the lowest point of that structure, since the top is the base or the low of that structure. And I retrace that, and I only trade the 50%. And as long as I have not more than a couple of order blocks in here above that 50% retracement, I consider this quasi to be at play and tradable. Like this one is an order block. Price will react to it, but it's not part of the quasi, right? So we gotta understand where's the higher probability trades, where's the high win risk reward ratio, and they are of course above that 50% retracement. So I might trade this, but not because of the quasi, but because it's an outside bar. Yes, check it out. It's not an outside bar. What am I saying? Let me take that out. I stand corrected. So the if it were an outside bar, then I think I may have put it on the chart before it actually closed, as I was expecting an outside bar, but it doesn't matter. This quasi is still at play, and this is the only order block that has been left to us to trade from. So I would be interested in waiting for price to come to that order block and have this kind of a move, right? And it hasn't been there yet. It may not even get there, but we'll have to see. Other than that, the H4 to me doesn't tell me anything, right? This is the area that I want to be entering. Anything else is to me noise, right? I know it sounds perhaps not what the viewers wanted to hear. They want to hear, where's the action? Let's get in here. And that's fine. Maybe there's another reason, but on the H4, this is what I see. There isn't a fresh order block being created here. There wasn't a fresh order block, even though I had that order block, plotted or drawn marked on the chart. Upon closer look, it wasn't an actual order block, right? By my own definitions, it isn't. So it's not supposed to be there. I took it off. It's not there. This is the only area. And personally, I trade the lower time frame based on the H4, right? So whatever I do on the lower, that's just me. You don't have to do what I do, but I trade the lower time frame. Whatever I do in the lower time frames, it's based on this time frame, on the H4. And this is the area that the H4 is telling me I want to be getting short, right? So to me, there's nothing to do. Just waiting for price to reach it. If it does, and then I can continue with my trade plan. Until then, I'm just in a waiting stance, sitting on my hands, and enjoying my time with Deanna, right? So let's if we look closer, because I know we have many traders looking at gold. So let's try to see if there's a reason, even though it's not my reason. Let's see if there are more reasons to go long or short this market. So M76 talking about trap traders. Abdullah wants us to look at gold. AP, that's the Associated Press, is looking at us. It's the gold is bleeding. It's going to be published in the headlines by the ANP. All right, so let's look. We have on the H2, do we have a quasi indicating any kind of reversal? We don't, right? None of these moves to me are strong enough to be considered this to be a left shoulder, right? And that would make this, of course, the head. None of it, at least not on the H2. Meaning, if I'm going to look for the reversal, it's not gonna I can't see it. The only thing though is there is a fresh order block created by that outside. We're currently in we have 2, 4, 6, 8 was tested on. This is the first attempt to mitigate the order block, and that's the only time if only TradeViewer confirms or agrees with me. This is the first attempt of retesting it, at least in this time frame. I would, this you could, if I were to trade this on the lower time frame, that is the area that I want to be entering from, right? So we are in a place at least at the H2, and there is another order block there too, but I would like to use the outside bar because that's stronger and that's more recent, even if it's only just one bar, to look for a short. This makes makes sense if you're on the lower time frame and you're looking for a short and you're basing it on the H2 order block created by the outside bar. That makes sense to me as well. It's also visible on the H1, which is not surprisingly. This is the neckline for a reversal, a bullish reversal in this time frame, right? Meaning that will be this would be the let me move this a little bit like so. So this would be the left shoulder, the head, and it needs to break this first. As long as it doesn't break it, we have no reversal pattern, no break of structure on the hourly, since the H1 is the smallest hourly we have, right? H1. So we'll have to wait for that before we take a trade long, if you want to hold the trade for some time, right? Depending on your time frame. So I see let's see, there is actually it has been taken out already. So we don't have any break of structure. We do have a bearish outside bar, an order block being retested as we speak. Let's see, what else do we have? Actually, I do like it as a I don't like the fact that it's this wide. It shouldn't be this wide as a 15-minute structure. But there is a quasi there, so use it to your advantage if you want. But what I would be looking for is if this is true, right? And we do have that. Look at that here. That's the quasi, right? The other way comes back into an area of relevance for that possible move down. If this is going to be the scenario, which we don't know yet, you want to go you want to get some information as the market is reacting with this order block on the H2, that it is reversing, it is transitioning into a sell kind of market, right? So that is, I think, the next step if you're looking for a short on gold. Why am I not able to? There you go, selected. Okay, so I would be looking for if that scenario is going to be any true, then I want to be looking for a short as soon as it reaches that structure. It already did, and it's piercing it a little bit higher. But where's the break of structure? At least in this time frame, the 15-minute. This is the highest point. So you look back. Let me see if that's. You look back for. Oh, I like this. There's something here. Open, close. Actually, no. So the break of structure would be here. That would be the neckline for that quasi, that forming quasi. And I would be waiting for price to break that before I take anything, at least on the 50-minute, if that's one of the structures that I would need in my trade plan. On the lower time frame, of course, you can find something else, but you got to ask yourself, do you want to really go? Because the lower you go with the time frame, the more signals you're going to get, right? You don't want to be trading 10 signals for each setup on the hourlies, but that's what you're gonna get if you just go to the, let's say, the 5 minutes or the 1 minute, without having proper alignment, alignment between the hourlies, meaning using something that makes sense, maybe the 15-minute. Wait for them 15 minutes to change, and then you do the you get your entry. Do we have we still have an hour to go for the open, right, Deanna? Or is it 1 hour? Okay.
A little under an hour. 50 minutes, 50.
That's what I thought, and I saw the market having these gaps, and I just thought that could be the no, it isn't. We still haven't opened yet in the States,
right?
But this is the structural trend, line in the sand that we need to be looking. I know if you're looking short, it makes sense to look for that, look for that setup, that transition, that reversal, but you gotta, be careful, because it's gonna make you think a lot of times it's gonna reverse and not doing anything eventually. Let it break the structures, and to me, this is the structural break that we need to wait before we include or conclude that the gold is reversing and changing and responding, and is going to eventually continue going lower based on that H2 order block. So that's my view. If you want to scalp this, for those scalpers among us, not that they need my advice, you should have your trade plan already. But what I would be looking at is how can I spot the reversal, meaning the quasi in that area, right? Especially this area, but if that's not possible, using the whole section. And so let's do that. The quasi in this case would be the highest point, is it? 1944, and this is 1945. So this is the highest point. That makes automatically this the quasi.
Victor, do you know the trick? Do you know the trick to make straight lines on? Oh, you weren't trying to do.
No, I did, but somehow it's not working. What wasn't it? Control?
I think it's. Oh. Is it control or shift? I don't know. I just. Let's see.
Yes, no, it is shift. Yes.
Shift.
Okay.
Yeah. There you
go.
Yeah,
it is. I've been using it for forever, but apparently it doesn't work with the arrows. I think that's.
That might be.
Thing. Yeah, because I was trying to do it. You see, it doesn't work. Okay, it's the diagonal line that it works on, the trend line. So that's.
I used TradingView for years trying to figure out how to get a straight line without, and I just came across somebody saying how to do that. It's a great trick.
Yeah, it is. It makes you look even more professional. So this is the head that would be considered then the left shoulder according to the rules, and you have an uptrend, obvious uptrend. It broke it on the 1 minute. This is the smallest time frame you have, and what I would be interested in as a scalper is what are the areas, the small areas that I can expect price to respect or react from, right? We have the upper order block, the one that was created by the head. That's not the, oops, what did I do? I clicked on something inadvertently. There you go. Okay, so this is the the entry. Just to make things complete, let's mark the retracement. Yes, these order blocks are above it. It's obviously going to be above. There is that gap. You could trade that gap as well, but as you can see, it was already reacted upon, although it wasn't closed. So there's different ways to trade the gap, but what I would be looking for is, if you're a scalper, for example, I would be looking for anytime the market comes close to this order block on the daily time frame, which is was it a daily? I think it was the H2. Was it? It's the H2, not the daily. So anytime it comes to that higher time frame order block, I would be looking for patterns in the candlestick that tells me that it's reversing, it's reacting on it, and you could be taking small scalps from it every time it gets to that level and have that kind of a move. Maybe a bearish engulfing comes back to retest it, you get in, and you just move for a couple of pips in that direction, in that direction of the H2, right? I have the same theme again. We have to use the higher time frame for your direction, but you're getting in on structures on the lower time frame, and you can do that as well on these order blocks that are being that might get retested in the near future. Even if the quasi fails, these are entries, valid entries that can be taken in basically in any pair. It doesn't matter, but in this case in gold. But I wouldn't be holding, take a trade and holding it all the way down until either something like the 15-minute breaks that structure, or maybe something, something bigger in any case that breaks the structure. I see that the quasi on the 5-minute, which this would be the neckline, the quasi on the 5-minute does not have an entry order block. See that on the top? There's no entry order block. So that makes me think, the 5-minute cannot give me a signal. The 15 hasn't broken structure yet. All of that makes me think, it's all not ripe yet, right? As a fruit, it's not ready yet. It has to mature in order for us to consume it. The quasi, that is, not the fruit. All right, so that's it. That's my take on different time frames, from higher swing, intraday, and even as a scalper. There are opportunities, but that's what I would be doing. And as you saw, everyone watching, and by the way, hit that like button if you're enjoying what you're seeing. If you're enjoying Deanna with us today, hit that like button today and every week. 3 times a week you're with us, right, Deanna? Or 2 times a week?
2 times.
Two
Two
times. Did I
times.
hear that? 2 times, yes. If you enjoy Deanna with us, hit the like button. And I'm sure you will hit it because I like Deanna, and I'm sure you
Aw.
do too. What I wanted to say was, there is a, whether you are a swing trader, a day trader, a scalper, even a position trader, the market is fractal, so you can use the same concepts for all of them, right? There might be some nuances, of course, but as I just did it using the quasi for all these different types of trades, duration of traders, of holding time, I mean, using the same concepts, quasi, order block, looking for that reversal, retest of a fresh order block, and so on. So it's that's the recurring thing. Even if you don't use the same concept, that's fine. But you can use them on multiple time frames. And the best trades are when you have multiple time frames using the same concepts, telling you the same story. When you have that alignment, that's when you're ready to swing that home run out of the park. All right, so that's gold. That's gold for us.
Can I ask you a question,
sure.
Victor?
Sure.
You said that
Go
you
ahead.
frame your trades on the 4-hour,
Yes.
but it seems like also on the 2-hour sometimes, right? Is that correct? Or is it still you're framing it on the 4-hour even for something that looks promising on the 2-hour?
No, just now I used the 2, but that was because I'm using it, but it's not something that I would trade because I need that H4 to be in the list. If it's not there, I'm not gonna touch it. But that doesn't mean, that
Someone
others
else.
cannot. Yes,
Right.
exactly. So for everyone else who might be looking for that short, that's the area, right? That's the order block. That's the area where you could be looking for your reason to go short. But I personally need the H4 to be in tow as well. If not, then my rule is I do not touch it. If I do, I would consider it a discretionary trade, meaning I'm deviating from my trade plan, which is not necessarily a bad thing.
Right.
But in general, I know that the more I deviate, the worse the quality of my trades become. So I stick to the plan, and my deviations are different. They're not excluding the H4. My deviations could be, let's say, put in an extra trade on when I'm already in the trade. I got a valid signal, and there's so much arguments for that this is going to be a great trade. I might put another trade on, like stacking it up, layering, which might not be part of the trade plan, but it's so closely, following the plan, just an extra trade on. Other than that, but once I start, losing, not requiring the H4, it changes my stats, and that's the point. It's still profitable. but decreasingly so.
Right. And you're decreasing your consistency. So I love that
Yes.
you have the flexibility to make that decision if that's what you decide to do, but also recognizing that consistency is a huge part of the goal. And by taking a trade, even if it's a winning trade on H2, that's not your consistent, your plan that you have outlined for yourself. There's nothing wrong with it. It's just that's not what you as a trader do. That's a great distinction.
Yes, I think focusing on consistency may sound like weird because
I don't think so.
But I don't either. But I mean, for the first time you think about it, why would you have consistency as the goal? Isn't the goal making money? I mean, if it's consistent or not, that's not the goal, right? But the thing is that it's through consistency that you get the goal, right? So it's through the process that you get to your end goal. And in trading, consistency is part of that process, and focusing on the process, not on the P&L, is one of the greatest advice any trader can apply to their trading career, trading journey. Focus on the process, and that's where things like consistency, discipline, having a trade plan comes in. Because you would say, well, why do I need a trade plan? The end goal is to the P&L, to get get the profit with or without the trade plan. But the problem is, without the trade plan, without the consistency, you're not going to get the profit. So it's so elemental, and even for your mind, we all know this. When you stop focusing on P&L, that's when the quality of your trades, your executions goes up, because you're not focusing on the emotions of the P&L. You're focusing on getting it right, waiting for the right moment, not too soon, not too late, just right the moment to get in at the right size, everything. You're focusing on the process, and that's the best advice anyone can give aspiring or starting out traders. Let's look at that reversal pattern. I'm seeing the market is going down, but it didn't get to any place that would be interesting to me. So I would still just be waiting for another push up if it comes, and if it doesn't, that's just fine as well. All right. Macio is asking if we are trading live. Yes, we are trading live. The only thing is, are you in any position, Deanna?
I have some longer term swing positions that I'm holding right now, but I'm waiting for the New York Open to start any intraday positions today. So I have a longer term position on the indices and on gold, but I don't see anything right this morning in gold that has me super eager to act. So mostly I'm planning to trade the S&P today if there's an opportunity. We've had a lot of activity in the S&P and the NASDAQ in the last couple days, so you never know what today's going to be bringing, but that's what I'm going to be looking at. And right now it's just holding in the range of yesterday, so not a whole lot to conclude from that yet.
And are you, in terms of the S&P, are you looking to for that relief rally into during today, or what are you looking at, or what you're looking for?
Potentially, it depends on how the market opens. So, there's a possibility that today might just consolidate some of the move from yesterday, because we had, the historic move over the last 3 days, and especially yesterday, where the S&P and the NASDAQ, but specifically my attention has been on the S&P, where we took out some lower levels and then pushed so much higher from that. So, it would not be a total surprise for there to be a bit of a consolidation in the next couple days, possibly.
Yes.
So really, my trading today in the indices is going to be dependent on what happens at the open. So it's,
Right.
35 minutes before the open, it's kind of hard to say. And as far as gold, gold is, to me, kind of at a strange place as well. So I would be more inclined for the short term to be short in gold, but longer term, I'd be looking more long. So I'm kind of at a strange position with gold right now where I'm not super eager to jump in, except for the longer term position that I already have in it.
Do you have a chart where we can see where it becomes attractive to you to start, thinking long again?
In the S&P?
And gold, I mean, you said
in gold.
Short term, short, but long term, long. But where is that short, switching back to long? Do you have an area where the viewers can, get a bearing as to, what are you talking about? What's, a level or something they can visualize?
Yeah. So I have futures, but I'm trading on 2 different computers, and the computer that I'm on, I need to get MT5 on it because I still don't have MT5 on my second laptop. So my regular trading laptop I have open with my charts, but I don't have it on this one. So not live data that I can show. So I'm not sure if that's as valuable. But I would say, looking at what's going on in gold, it's just a little bit early for me. I like the big movement down, and we could see a bit of a relief rally from there. But so far this morning, my signals for intraday are all short still. So, it's a little bit mixed. But
so you're not ready to go long yet. If anything, if there's a signal, it's going to be for the short side. I see that on the daily time frame. In any case, the demand area are below us. We're not there yet. We're far from that. There is such a fair value gap here that hasn't been completely closed yet. So you could easily, reasonably expect that to be, sometime in the future be closed.
Right.
If that were to happen, that means that we're going to see lower prices, which is, in line with what we've been seeing all these sessions. Also, that wick we got yesterday, that lower wick, isn't exactly inviting for looking at on the long side. After breaking the structure, in terms of the quasi, after breaking the structure, yes, there is a likelihood it will pop up, but it doesn't tell you when. It can still continue to go lower before it comes back. So I think I totally agree with you that this looks quite weak and likely to continue being weak until it switches over, but it hasn't yet. At least not on the daily time frame. If we look at the we saw that it's only the H1, not even the H1 structure has been broken. So this is short. All signals to me as well, daily H2, H4, they're all, even H1 is still very short. It's making lower lows, not breaking structure. I don't really see a reason to expect price to go much higher. Maybe on the lower time frames, but not on a day trade kind of a session trade. I don't see that.
Yeah, for a session trade. So if you're looking at intraday, I'd be more inclined to look to the short side, but I like, in a lot of ways, it looks like gold looks similar to the S&P and NASDAQ, how there was a huge spill over, but there's a little bit more of a rejecting wick on the indices compared to gold. And so for me, I just would want to see a little bit. I mean, I am long-term looking to be long gold. I do have a long-term position open on gold, but in order to add to that position or get very bullish, I still would want to see more of a rejection of those levels, because at least in the futures market on the daily time frame, that imbalance was filled and price kind of came down to what had been, if you're on the daily chart back in, let's see what this was, February 11th to February 11th to February 25th, there was this a little bit of a consolidation area where gold was kind of consolidating at what had been a bit of an all-time high area. It was an all-time high area, and then price dipped down below that area and shot higher. So to me, that's bullish, and we're right back at that level, rebounding off that structure to the left there. So I'm not totally not bullish, but I'm just not strongly bullish yet. And intraday, again, I'm seeing short signals. So for me, it's a bit of a wait and see on the gold still. So I'll be focusing on the indices today.
I think that's
nothing happened there either. So hard to say.
Yes, I think that's that shows maturity as a trader. When you're not, you don't have to be in any trade, right? You're not compelled to be trading all the time. Trading doesn't mean actually having a position on and watching price going up and down with your position. Trading is waiting. It's like when you go on a hunt, you're waiting for your opportunity to shoot, and that's to me, that's what trading is. It's a lot of waiting, and not a lot of necessarily shooting. Right. Pulling the trigger is just one little piece of thing you do, but it's a whole bigger process that is trading. It's not just pulling the trigger. So I totally agree, and I like your stance as well, Deanna, where you're from what we understand, you're waiting for those levels to be hit. You're waiting for the market to come to your areas to show you what you want to see before you engage in anything. And I think that's maturity as a trader, knowing your time, knowing your place in the market. It's not just because we are traders, just because you are or I am full-time trader and I make my living on trading, doesn't mean I'm allowed to start hitting everything that moves. Right. That's not how it works, right? You got to know your place. You got to be humble and knowing, okay, that opportunity is not mine. This one isn't, and maybe the next 10 ones aren't mine, but that's the one, coming up. This is the one I have my data on. This is the one I follows the plan. This is mine. This is really mine. I need to catch this. And everything else is just basically noise because it doesn't fit your trade plan. And when you realize that, and we see that in you, Deanna, that you have a clear idea of what is and what isn't your moment. And I think that's a very good example, Deanna.
Yeah, I think, there's plenty of opportunities to trade in gold. And right now, looking at how things are, I just think there are more clear, actionable trades elsewhere. So that's just for me. That's the way I'm looking at it. But, when you're, like you had said before, when your signals are aligned, that's when you can get really strong bullish or bearish, depending on what you see. But right now, it's just a little bit too mixed for me in gold. So we'll see. We'll see what happens. I think I'm heading out, Victor, getting ready for the open now. So I don't know if someone's coming back to hang with you.
Yes, there is someone that is coming. It's actually here. Ashley is in the background to come in as soon as he gives me a thumbs up. There you see, I see the thumbs up. We can add Ashley to the stream. Ashley, how are you doing? Ashley.
Good in yourself, Victor, and hello, Deanna. Pleased to meet you. And I've been listening to some of your streams for a couple of weeks now. Very interesting, insightful areas, and you certainly help the trading community.
Well, it was nice to meet you, Victor. Hope you have a great rest of your day. And Ashley, everyone in the chat, thanks again. Always so fun to have everybody in the chat. And we'll see you next week. Have a great rest of your week, everyone.
You too, Deanna.
Thanks. Bye.
Bye-bye.
Bye-bye. Ashley, how is life been treating you down where you are?
It's been good. It's been good so far. Very interesting week. I'm sure everyone has been discussing it, and I've heard in the live stream from last Thursday. Lots of interesting moves, increase in volatility, but relatively speaking, not as bad as some previous market crises that I've been through. So, but very interesting. And hello to all the viewers as well.
Not as bad. I think you Yes, we have Marina saying goodbye to Deanna, and yes, there is a bit of a delay in the chat. So whatever we say and whatever response, it's gonna come in about 20 seconds from now. But Ashley, you said the crises isn't as bad as the ones you have been through, and when you said that, I know what you mean. What I know what you mean, but what comes to mind for the viewers? What are you thinking about when you say these are not as bad, and this is bad enough? I mean, this is account liquidator for a lot of traders, especially new ones out there. These extraordinary times. But what other events comes to mind when you think of worse crises?
Well, if I reference my personal experiences, I've been through 4 financial crises, at least 4, and I've had positions and trades going into them, traded through them, and survived them. Just to give you some of them, the first one was basically the 2000.com bubble, then followed by the 2001 9/11 terrorist attack, then the 2008 subprime, and then COVID as well. So those are the 4 major ones, and I'm probably each one of them to give the audience some gauge of when I say it wasn't as bad, was fairly mild in relation to the Trump tariffs last week, is in all 4 instances, the one asset class that has trading curbs that you mentioned yesterday, Victor, the stock exchanges, they all hit their circuit breakers, their trading curbs. So the worst one I think was they had at least 2 or 3 circuit breakers hitting was in COVID
9/11
on NYSE or NASDAQ. Yeah, so it hit it twice.
Yes, on a single day, right?
Correct.
Yeah, that's I do. There's always there's a number of events that we can look back that has been in certain metrics has been much worse. So, but it's good to put things in perspective. We were talking about that yesterday, how it's important to know what can happen every so often, these crises, for your longevity. Because imagine you're a trader, you have a mental stop, and you just don't put in the stop because whoever said it on YouTube, or you thought it was a great idea. If I don't have a stop loss, it can't stop me out, or whatever people say sometimes. And I understand that there is a place and time to trade even without stop loss, in the sense that you can do it safely if you know what you're doing. But coming into these high volatility where the VIX is at a record high again, closer to COVID levels, you gotta know what kind of market condition we are in, and having no stop. For example, just a very simple, silly example. What would it make to your account if you get one of these move against you, and you were still into no stop loss, or you just forget putting your stop loss. I mean, it's just gonna get you a margin call. Plain and simple, you're gonna lose the account. If it's a prop firm account, you're gonna be hitting those limits before you know it. For your longevity as a trader, it's very, very important to know what's able to happen, even if it happens once 10 years, once every 5, even once every 15 years, right? You don't want to be wiped out, all your profits because of a single event that happens, almost never, but still once in a while, once in a blue moon, actually rarer than once in a blue moon.
Very, very correct, Victor, and I fully agree with you. And it's very interesting how you mentioned what you just mentioned and the topic we're discussing, because I actually did plan something along with the theme that we're talking about and what's happened last week. Because as a trader, it's not about necessarily suddenly going through one of these financial crises or a high volatility. It's also about understanding planning before that happens. And I'm sure you've been associated with it. There's something called the risk of ruin formula, or the actual stat that is actually very important for every trader to go through, irrespective of the market conditions, whether it's low volatility, high volatility, a financial crisis, a boom, a bullish market, etc. It doesn't matter what. The financial trader should be going through that and understanding their strategy and their risk management, and understanding what's their limitations, what are the red line parameters. So it's something I actually did plan for to share with the audience in this session and get them to participate. But again, I'll follow your lead. We can talk about any other topic as well.
Ashley, we love your ideas, and risk of ruin is such an essential concept, an essential idea that needs to be understood by everyone. And I love that you bring it up. And yes, I would love to see you explaining it to the viewers, because it will help them a lot by realizing, it's a real thing where you can have, well, I'm not going to spill the beans. I'm going to leave it to you, Ashley. So whenever you're ready, just let us know and we'll put your screen on, or I don't know what you have prepared, but just go ahead.
I will share my screen. Thank you very much, Victor. And Victor, as I go through, please feel free to jump in any time. What I'd like to do as well, as I go through it, I'm going to actually use, again, the account I've been sharing with the viewers, use that as a base. But I'm also going to invite the viewers, if they would like to share some data from their side, they can put it in the comments section. And then maybe we'll need to kindly ask the back-end maestro to maybe pop up one of them that they can choose. So I'll mention in a moment when I share my screen what information is needed. To all the viewers, if you'd like to share some of your stats, and it's up to you, then we can use that as an example as well. I'll use my 5ers bootcamp challenge as an example, and exactly also showing the stats as a basis, and then we can use any other viewers' stats if they'd like to share. Okay, so I'm going to share my screen in a moment.
Awesome. I like it, Ashley. I love it.
Wonderful.
While you're doing that, I'm going to look at EU for a few seconds while you're preparing your screen. In terms of, very shortly, in terms of EU, of course,
go for it as long as you'd like, Victor.
As long as we've been seeing this in the last couple of days, right? Big movements to the upside. Then we have the tariff decision coming, and price went berserk, for lack of a better word, in the markets. What we have is currently we have the daily time frame prices coming closer. We're not there yet, but closer to the ignition or the initiator of this bullish move, right? We have that bullish engulfing retested successfully for a second. Actually, it's one. This is not a second attempt. This is the same one since it never left the order block. It creates another order block, retested for the second one successfully, and then we have that push. So these are the demand areas on the daily time frame, and we don't know if we're going to reach them before switching back to bullish. But if we did, then that's where we want to be going long from. Currently, there isn't anything else to be seen. Of course, you may have traders looking for that break and retest, but in my opinion, it's already broken that level and it's below it consistently. So that's not something I would be interested in, even though I don't trade that. But even if you were, I have that sneeze trying to sneak up to me, but we'll manage. The H4. The H4 is telling us, of course, we have the same kind of, it's the same structure, right? Just zooming in. We do have a quasi in here, and we do have some structures below us. But currently, we're not into any of those, right? It's the same levels I indicated on the daily. So if we are let's assume we have a couple of scenarios where one of them is we're going to go lower into the structures and perhaps have a reversal pattern coming back up, and there we'll have to see if it's going to continue or it's going to use these structures to continue lower. That's one thing. Or we could have a reversal pattern being presented and acted upon before we reach the structure. I mean, the market can reverse even without demand zones. Demand zones are great areas to indicate where it's likely to happen, but it can happen anywhere, right? The market can switch and start making bullish structures here and build, momentum from it and then continue up. So far, the daily didn't give us anything, but the H4, we did get a bullish order block here, which we'll have to see. That will be like a little test, even though it's against the trend, against the momentum. It's interesting to see if the price wants to do anything with it. So that's something we can, anyone can be looking at the end of this day and see, okay, is this order block being respected? Is it something the market wants to use as a stepping stone going higher or not? But the more likely scenario is that since we are in a H4 downtrend, is that the market is respecting very nicely these bearish structures, right? And I didn't even mark all of them. Look at that. Look, it comes back to that order block and it gives you a bearish engulfing, right? So the order flow is predominantly bearish. So that's the likely direction price will continue. At least that's what price is telling us right now. So we have the last time around is this order block being created, right? Which there's that close again below the open, creates engulfing. That's the order block. And in this candle, the previous candle, it retested it, right? And we are still in that process, right? So we don't know if it's going to be successful or not. But if it is, then it's going to push price just in the right direction. So we could be looking for a short already in this area, in this H4 order block. And I don't see it yet. Actually, we did it already. I thought we on the H1. There you see that's the sweet spot where I would be interested in looking for that short, right? Here you're taking the H4 and H2 and using them for that continuation. It may not be this wick necessarily. It may be something higher. It may still be something to come, but the lower time frames will guide us through that, and you can see it going the lower time frames. We did break structure. This is actually increasingly looking good for a trade for myself. There we go. That's the neckline. That would be the head after it interacts with the order block on the hourlies, and we do have a very nice order block here on the 5 minute. That could be, I will call that what it is to me, which is a possible entry for the 5 minutes. So if this gives you enough confirmation that's not the correct direction, we could be taking a short as long as the market is giving us the signal that we want to see, that this could be where it turns around. It may not be. Maybe it's gonna go higher and then make that reversal. If it's going to make the reversal, of course, we don't know that in advance, but that's something that I would be looking. And if I were to trade this, I would be trading it to the next level, which is not that far, but the next level to me is basically that H2 order block, which I was just taking it to the next level, next structure below us. And if you are, we don't have anything on the daily, right? So I'm not able to hold it longer. But if you do have something, maybe some other indicators telling you that there's momentum still building up, not decelerating, then you could leave a position open for that continuation, because in the end the H4 tells us that it is going in that direction, and that is a possibility. But I'll leave that to everyone to decide based on their own criteria of their stats and their strategy. So that's EU, and I see that you have your screen ready, Ashley. So let's get to the get down to it, to the Go ahead.
Wonderful. Thank you very much, then, Victor. Just for the viewers, just to share with Confluence on the euro-dollar analysis, Victor, I also would agree. Nice analysis there. And then just something to add, I was just trying to check that as well. On euro-dollar, just be aware, viewers, euro-dollar is also quite close to a new 52-week high. Under correction, but if I remember correctly in terms of the daily chart, it's also quite close. It's in a rising trend, and it could be moving back with that rising trend and challenge that high that it's set, obviously from last week, and everything to do with the reallocation of the dollar and the strength and weakness. So be aware of that. Okay, perfect. Thank you very much, Victor. Right, so for the viewers, you can see my screen. Just a brief intro in terms of risk of ruin, and anyone can Google it, the information. I'm not going to go into the depth about it. I just want to touch on the main purpose. And what the Investopedia site mentions is risk of ruin is the probability that an individual will lose substantial amounts of money through investing, trading, or gambling, to the point where it is no longer possible to recover the losses or continue. So we just use that as an introduction, as to build the context. That risk of ruin simply means is that with certain parameters that I'm going to share with now, what is the chances of you ruining your account? Now, this is highly applicable with what's happened last week and potentially the increase in volatility now. But more importantly, over and above that, as a trader, you need to be prepared. So you need to be aware of these stats before things happen. We could be in a very low volatility period. You still need to know. We need to be in a good period. When you're making money, you still need to know. If you're losing money, you still need to know. So it's of vital importance that you are aware of it. However, it's times like these that starts to highlight the importance of these areas. So for traders, always think of your journey in trading as a learning experience. Anytime something has happened, whether it's good or bad, always try to take out what you can move forward with that. And unfortunately, we as humans, we only really start to like to look at the bad things when things happen and they're bad. So that's why I mention it. So it's something for you to be aware of and to add to your arsenal of tools and your understanding, and always be aware that irrespective of what the market is doing. Okay, now with that intro done, let's just go and have a look at this diagram quickly. For any viewer that would like to share their own personal stats in relation to calculating risk of ruin, this is the stats you're going to need. You're going to need to know your percentage win rate. You will then also need to know your reward risk ratio. Now, I split the reward risk ratio into two areas. One is aimed, meaning what is the reward risk ratio I am targeting? What is it initially set at for each trade? And then also, what's the average achieved? So remember, your aimed reward risk ratio, what you set out, doesn't necessarily mean is what you're going to achieve. If you just set your trade and you don't, you just set your stop in TP and you don't basically touch it or move it, i.e. set and forget, most likely your achieved will be your aimed, but not necessarily. So be aware of that. Then we're going to need your max drawdown, percentage max drawdown. In the example given, what I'm going to be doing is I'm going to be using 4%, okay? And the reason I'm going to be using 4% is because if you have a look, in my example of the 5ers Bootcamp Challenge, when you're going through the challenge before you fund it, it's 5% until you're out of the account or out of the challenge, out of the program. However, when you fund it, that 5% changes to 4%. So let's change it right now already to say we already use the parameters as if we are funded. So not 5, but 4. Okay, and then we're going to need the percentage risk per trade. I've split as well into initial and then average achieved. And the reason I've done this is because I have an initial percentage that I risk per trade, but then I manage my trades. As the trades move in my favor, I reduce that risk. So then I get a percentage risk per trade that's achieved. Okay. And then again, number of trades, and this could be per week or as a total period or per month or for whatever time frame. Okay, so if you'd like to participate and share your information and get an understanding for your own personal strategy, it's just these stats that we would need. Okay, so that just gives you a good idea. Let me hold that onto the screen for a bit. Anything you'd like to maybe share with Victor in terms of any of the parameters that are needed for risk of ruin, or maybe you'd like to share your view of risk of ruin or what you think of it?
No, I think you're doing a great job in being complete here, Ashley. I think it's not something very popular in terms of views, and it doesn't attract as much viewership because YouTube. And I'm gonna keep it short, but YouTube is geared towards instant gratification, right? And this. You don't get the instant gratification of, right? It's something that's going to help you a lot, but down the line. But it's very, very important you understand these concepts, you apply to them to get the rewards. And I think every trader should know these stats, because this will, your longevity will depend whether or not you understand these stats of your performance and your strategy. So I don't have anything to add, Ashley, but this is my kind of language, my arena where I like to dwell upon personally, and also if I get a chance to talk about with anyone who's interested.
Wonderful. You know what, Victor, it's very interesting what you say, and that is one of the major challenges with the skill. It goes against a lot of fibers of us being human beings. We like instant gratification. Trading is not necessarily going to satisfy that consistently and sustainably, number one. Number two is that these areas, like you mentioned, they're not like the most attractive, exciting areas. But you know what? These areas are going to allow you to get to your end goal, because at the end of the day, as traders, we all have the objective in mind for profitability, financial independence, but that's not going to happen in a couple of trades or one trade. It's called trading, ing for a purpose, meaning you've got to continue to trade, and you've got to put yourself as a trader in the best possible position to trade. Now, I'm going to share something interesting with the viewers compared to what's happened last week, okay? And the number of trades I've taken from last week up until now, it's only been a week. Through that volatility, my trading has actually increased. There's a story about that, but I don't think we can get into it right now. But I've changed that the strategy because of the events to my lower time frame strategy, and it took in the region of 300 trades. Okay, actually it's 300 times 3, because each position is 3 trade orders. So that's 900 trades I've done in less than a week. It's actually less than a week because I changed it on Friday. And you can see now, you're going to see you'll see the results. I'll show the dashboard again. But it's interesting when you take the stats from the account and we look at the risk of ruin, and we understand even going through a challenging time or increased volatility as what we've had, which relatively speaking, through other financial crises is relatively mild. For some, it may be a huge shock, which I understand, but then again, they can't really compare it with anything. I have the ability to, and relatively it's been mild. Okay, it's been mild. Still been huge, but it's been mild. But that gives you an idea. Okay, so let's have a look first of all. And let's have a brief view of the 5ers dashboard on my account. So we can see even though the week has been drawn down low, but then recovered, and then I've been stabilizing through all this volatility. Number of total trade is 1,200. That stood at about 250 plus minus a week ago. So it's close on to over 1,000 trades I've been able to take. And yes, the key thing is about in times of these, if you are aware of your stats, if you're aware of your strategy, if you're aware of everything, you can trade through this. Okay, there could be a good opportunity, there could be not. But the main thing is to keep on trading. Don't fear that. You'll only fear it if not prepared. So that's the key thing. Okay, so those are the stats there. You can have a quick view of the stats, but I want to get into the main areas. So that just gives you a brief idea. 1,200 trades. Profit factor still about 0.89, still below there. So my balance is 24,422, but my open trades right now, I am at 224,636 for the equity. Okay, so that just gives you a good idea. And notice as well here, average loss dropped to $6.30 and average profit 11.51. Okay, so that's interesting from a point of view of what we're going to discuss. So that just gives you an idea. What we're going to do
Ashley,
now is the
Ashley,
following.
I'm sorry to interrupt you, Ashley, but there's a little bit of a delay, or a little interruption in your communication, in your stream, in your connection. So maybe you could check something if everything is running fine. It's okay, or may have something to do with the extra screens you are currently showing. But in any case, it's now fine, so we can continue. If there's any delay or slowing down, I'll tell you, just so you know.
Thank you, Victor. I appreciate that. I understand. Thank you. Right. So on the left-hand side of the screen, what you can see is the stats in order, my specific stats in order for the risk of ruin calculation. So the figures in brackets is my lower time frame, on average, my lower time frame strategy. Okay, the ones not in brackets is the higher time frame, my core strategy based upon the daily time frame. So that just kind of gives you an idea, so we can look at both. So if we look here, we're going to put the win rate in as 35. So I'm going to use the daily one first, 35%. Okay, then risk per trade is a percentage. I'm going to use my initial at 0.2. So this is before I start trading the strategy. I'm understanding the necessary parameters. Okay, 0.2. Remember that 35% comes from the data, the data that's collected as you trade. Okay, the average profit and loss is basically your reward risk ratio. And I'm going to put the initial reward risk ratio of 3 in. Right? Then we're going to put the number of trades. Let's say on average for a week, it's 100 trades. Okay, so the results that generated is basically going to say for that number of trades, however long it is relative to your strategy. And then the max drawdown, we're going to put as 4%. Okay, so remember, when you funded on the bootcamp program, the 5ers, when you funded, you've only got 4%. In the evaluation stage, you got 5. So let's say we have evaluated now, we in trading live, we're trading real money, and we can benefit from it. So let's use 4% and not 5. Okay, and now we're going to calculate. Okay, so you've got a risk of peak to value drawdown. And I'll just hover there so people can read. But basically what that percentage is telling me is that in relation to this set of 100 trades, however long it is, there's a 2.6% chance that I will reach the 4% drawdown the way with my current, with the stats of win rate and with my average profit and loss, my reward risk ratio, and how much I'm risking per trade. So there's a 2.6% chance that over 100 trades, I will actually be eliminated from the program. Okay, so that's really some useful insight to understand how important is managing risk. Then risk of ruin, the risk of ruin is at 0.43%. I'll leave that on. And basically, that's also telling me that there's a 0.43% that I will actually reach the 4% drawdown. I made a mistake with the of the risk of peak to value. That is saying that there's 2.6% chance from the highest high in my account that I will reach 4%. The 0.439% is a probability that I'll actually reach the 4% total of my loss and get kicked out. So the risk of ruin. So those are low percentage figures already without even setting out. That's just the parameters to set out. Okay. Let me just pause there. Victor, would you like to mention anything about that stats before I go into the next little exercise?
I really like this this calculator. This is by sort of like Monte Carlo kind of stats, right? Where they
Yes, very, very similar to that kind of Monte Carlo theme or statistic, that model. And again, the Monte Carlo is also in the CMT program, Chartered Market Technician. Yes.
Yes, I like that because, of course, it gives you a deeper understanding into what really is possible, right? Even if it's a low percentage, you got to know. If you don't know, how can you prepare for something? If you can't see it, you can't measure it, you don't know about it, only if it happens, but by then it's already late. So having these calculator, quantifying, because that's what you're doing, quantifying the probabilities of this event coming out, which is risk of ruin, right? What are the chances that a specific limit gets exceeded is very useful. I like this calculator a lot.
Indeed, and it's on the web. It's available. There's so many of them, but it's more important about the concept. Now, what I'm going to do is, what's also important, and which I see very little traders emphasize on, is actually managing their trade. And I know from their certain experiences that tend to say, I prefer not to move or trail my stop because then I get kicked out, which is understandable. And you've got to get the right balance of the distance of trading so it's reasonable enough to give that trade room to breathe. But what they're missing out on is the understanding of how valuable that is for your longevity, that word that you use, Victor, which is highly important. For you to be a successful trader, it's about keep on trading. Keep on trading through every market condition. That's how you're going to achieve all your goals and more, is keep on trading. And this ratio, this formula, really focuses the mind to understand how important that risk management is. So what I'm going to do now is, the stats I put in is actually the initial stats of the strategy. But remember, I manage the trade, so I reduce my risk. So we're going to first adjust the average profit and loss, the average achieved reward risk ratio of 1.61. So it is lower. So what I achieved is lower than what I aimed, but it's still above 1. It's still a fairly decent, reasonable reward risk ratio achieved. And then I'm also going to adjust the percentage of risk per trade of that I achieved, the average that I achieved, because I reduced my risk. Okay, and that is to 0.1. Sorry, not 0.1. So that's to 0.052. So I set out to maximum lose 0.2%. And some trades I lose that. But on average, I'm losing 0.052% per trade. Now, watch what it does to the figures. Zero. Meaning, both zero. Meaning that the way I'm managing the trade, there is absolutely no chance within this 100 trades that I will reach a peak drawdown of 4% or get kicked out of the account. So it's really mind-boggling to go, wow, this is really quite amazing. If I focus on managing the trade, and why would one want to manage the trade? Is because, remember, if you only risk initially 0.052% as a trade, and you don't move your stop, you hit TP, you make profit, which is good, but the physical value, dollar value relative to the account is going to be minimal. So there's a way that you can risk higher, like 0.2, and if you hit the TPs, you're going to be making that 0.2 or a multiple of that 0.2. However, if you don't, you can manage that to reduce your average loss and still maximize your profit. So that's the beauty about it. So it's 0 and 0. That means there's absolutely no chance that I'm going to get kicked out of the program. Okay, within this 100 trade example. Okay, so that's quite a, for me, and as a trader trading as long as I have, that's absolutely amazing. And that gives me the motivation to move, to keep on trading, to not fear the market, as long as I have things in place and understand. And that understanding is key.
Perfect. I love this. I love this, Ashley, because you're using data. You're using hard data to for your mental tranquility, basically, right? You know you can go through the storm. It might be raining, high winds. You're calm because you know your stuff. You know your data. You know what is, even what percentage the chances are that you get, you're hitting those limits, and knowing makes such a difference. Having the data, having the possession of your own data, is such a game changer to everyone. Everyone who is just trading blindly in terms of their data, their performance, and their risk of ruin, could lower their stress level by knowing their stats, right? That's basically what we're saying. Another thing, Ashley, I think it's super important and interesting, if we could in the future, not today because that's another subject, but in the future, what are the concepts or the principles? And I think you already know where I'm going with this. What is the according to Ashley, what is the proper way to manage your risk? Because it's not easy. It's just not moving your stop to break even, and it's gonna do this trick. It's actually quite difficult to know the optimal moment and distance that you need to secure to achieve performance enhancing with your trade management. The majority of the time, and that's when you don't have the data, you are not going to improve your performance. That's maybe too strong of a statement, but it's quite difficult to improve your performance by managing the trade if you don't know what you're doing, if you don't have the data. Obviously you do, but I would like to explore that perhaps in maybe the next one, or maybe a couple of weeks from now, if you're interested in, because I think that's super important, to realize when to do what and what to do, and when that moment arrives. Awesome,
100%, 100%, Victor. I'm certainly up for that. And then just to give you a brief response from what you mentioned, to tie it back to what's happened recently, is most people under huge volatility like we've had, what they tend to do is freeze with an open trade, and that's the last thing you want. You always want to act. So the first thing you always do, first line of defense, and it should be coming from not a thought, it should be coming from a natural human reaction. When you're experiencing huge volatility and you're losing quite a bit, you cut half of that trade straight away, absolutely straight away. And the reason why straight away, doesn't matter how big the loss is, you cut it half straight away, because you've just done the first thing, and the first thing is to act. You don't want to be a frozen deer in front of headlights. And that's what often happens when you're seeing this huge loss. After that, half the problem is solved, and then you start managing the trade out for the remaining half. So that's the first comment I'd like to make. The second comment is, again, irrespective of market conditions, that is why my strategies, there's at least 8 different areas or points where, or concepts where a trade can come out. Not just managing the trade itself, but managing the account itself. But yes, to your point, Victor, I will prepare something to share with the viewers in the audience in relation to different ways that one can manage a trade, not just by trading and not just by just setting a stop in a TP and forgetting about it. So there's many ways.
Before we continue, Ashley,
Yes.
Thank you for your proposition or accepting that suggestion. Yes, we'll do that. Awesome. But everyone, guys, this is pure gold. I know it is not sexy talking about stats. It's not very attractive. It's not exciting. It's not as entertaining. We will not get you to laughs and things like that. But this is golden. Knowing your stats, basing your trading, having it being based, having it data driven, right? Evidence based is so crucial for your success. We cannot stress that That's why we talk about backtesting so much. That's why we talk about knowing your data, measure your drawdown, knowing your stat. They all mean the same thing, right? You have to know your data. You got to know what you're doing. Otherwise, you have, well, I don't want to say no chance in this industry, but your chances are very, very slim if you don't have, proper. Actually, I enjoy this. I enjoy this a lot. To me, this is very entertaining. But I understand that it's not for everyone, and that's why I wanted to tell everyone, hit the like button, pay attention, because this is the good stuff. Ashley, it's all yours. Go ahead.
Thank you, Victor. Just something to reiterate what Victor mentioned is, again, with this area we're discussing, not as attractive or exciting, but this does separate the amateurs from the professionals in the skill. So if you take the word professional and you really understand that word professional and not just use it haphazardly, this is the area that really separates the amateurs from the professionals. So just be aware of that. Okay, and now what I'm going to do, let's go on to my lower time frame, and we will put in the stats, and then we can kind of see, and then just think about it. Take some time after the stream and think about it for your own strategy for the viewers. So we're going to take now, let's say my lower time frame strategy is 33% win rate. Okay, and then the aimed reward risk ratio is 2. We're going to keep it max drawdown of 4%. Then the risk per trade initial is 0.1%. So when I'm trading in lower time frames, you can see what I've done by default is I reduce my risk by half, or I reduce the risk depending on parameters on the account, etc. But basically in this case, it's 0.1, which is half of the initial. And the increase in trades here is, let's say, 300, and we have 4. So let's calculate that. Okay. So with those parameters, I have a risk of ruin of 10.7%. So that means that there's a 10.7% probability that I will actually lose that 4%, get kicked out of the program. The risk of peak to value drawdown is at 19.5%, meaning that there's a 19.5% chance whenever I'm trading and the account reaches a new equity high or balance high, there's a 19.5% chance I will draw down at a point in time from that high of 4%. Okay, so you can see it is higher stats than the daily, but again, the number of trades has increased. Okay, now let's have a look at if I change the stats to what I've achieved. So the average reward risk ratio I've achieved is 1.78. So we can change that to 1.78. And then the achieved risk per trade is at 0.026%. Okay, same 300 trade, same 4% drawdown. 0, 0. So 0, 0, meaning that there's a 0% chance of ruining, getting kicked out of the program, and a 0% chance of when risk of peak to valley, if I've reached a new equity high, that I'll draw down by that 4%. And the reason I've used the 4% again is just because of the 5ers program and using that, because if you reach that, you're out of the program. So it's making it real for the viewers to say, just take that. If you want to be funded, have a look at that and then use your parameters. You can even play around with these stats to say, let's suppose I want to create a strategy or I want to adjust my strategy and I want to try and achieve this in my strategy, or this needs to happen. What do you then need to adjust? This is a very good way of understanding, again, that longevity, that word longevity, which is a good word, about your strategy and your trading, because that's very important in the skill. Keeping alive in the skill is what's going to get you to the end. And that's very important. So hopefully I've shared some value to the community, and thank you very much for all the comments. You're most welcome. It's something I'd like to do, is give back to the trading community from what I've experienced.
Awesome. Ashley, I would like to thank you for this. This is valuable, and I hope the viewers realize how valuable and how helpful this is going to be for their risk management, for their position sizing, for their longevity. I mean, all those great important metrics and decisions that we all, knowingly or unknowingly, we choose, right? Everyone is choosing. You can't trade without, you have to choose the position size. So you are already making these choices, whether you have done them properly, data driven or not, you're still doing them. So you better do them. And there's no way around. You can't trade without making those steps. So risk management, risk is so inherently interwoven in your trading. There's no separation. Trading is taking risk. So you gotta be a good risk taker, be a good risk manager. And these are the tools, these are the approaches that will help you maneuver your risk. Imagine you have a 10% chance of ruining, and you can do certain things to your trade plan to bring them to zero. Now, zero, you'll say, well, how is that possible? Because there's always that chance of something still happening, even if it's unlikely to happen. The thing is, it is only a certain number of trades. It's only 300. I say only, although it's still a big number. You mean so? But it tells you that it's so close to zero that it's basically zero, and that is what you want. You want to have those risks mitigated down to zero, where it's basically not going to happen at all, never, right? And I think this is awesome, Ashley. I think you're such a great addition to our stream. I love it when you join us with these very insightful, lessons, basically, right? They're lessons about how you have managed your risks, and you're sharing that generously with everyone in the community. Jack loves it as well. Yes, definitely loving it, Jack. Hit the like button, everyone. If you're enjoying this, if you think there is value in here, hit the like button, because, well, I can assure you this is very important. As I said, I can't repeat it often enough. It is very important for your trading. If you want to get to those big payouts, right? I know that's what is on the mind. Every new trader, they see those big payouts. They say, yes, I want to achieve this. I want to have this kind of life. I want to be, independent. I want to be whatever it is that your dream is looking like. You're not going to get there, not even close, if you can't manage these first, right? If you don't have a grasp on your risk management, you're going to fall down on your way to your goal and might probably not ever even reach it ever, right? So these are the stepping stones to getting your goal. I'm not kidding here. This is not a sales pitch. That's reality. You need these as, stepping stones to your goal. So awesome, man. I'm thrilled every time you're on.
Perfect. Thank you, Victor. I've got one more exercise to do with the calculator that also might be also mind-blowing. But before I do that, just a couple of things to mention there from what you said, Victor, as well. So number one is that once you go for this calculator, and let's say you had 0% like me, it doesn't mean that you can't still blow that account. There is still that, always with trading, there's always a probability, but it's very, very unlikely. Moreover than that, about the unlikely, it's about, let's say something, another financial crisis happens and something happens to the account. Not a problem. With understanding this in your trading arsenal, you're much more likely to pick yourself up from the feet, start another account, start again. So it's all about that mindset and that condition of you trading and understanding. So as you trade, and as one trades and the accounts get bigger, or you go through the program and the levels get bigger, your emotional, let's say your EQ level of trading needs to either be stable or increase. You can't be a wreck trading you can't be like hunky-dory trading a $10,000 account and then you're an absolute wreck in your life when you're trading a $2 million or $20 million account. That's not sustainable, and that's not the right ethical way to trade. It needs to be even kill. So it doesn't matter what size the account is. Understanding these stats will get you there. The other thing to mention is that with funded programs, it's more valuable to be consistent and know that you can escalate the levels and not just go through 1 or 2 or 3 levels and then you got to start again. It is possible as well, but then with these stats, you're much more well grounded to continue compared to someone else. And then lastly, I might say a very controversial statement here, but in my 27 years of trading, I would prefer to start out trading understanding stats before the charts, because this gives you such a different and more relaxed understanding about the charts. When you start out with the charts, you're always trying to see where I'm going to be right. I need to be right. And the market must get to this level. It needs to hit this. I have to do it. It's got to get there because of the analysis. It doesn't have to. The market's the market. Market will do it. Will do it at once. Understanding these stats, you have a much more relaxed view of analyzing the charts in technical analysis. So it's amazing. And then lastly, I know our time is going, but lastly, an interesting exercise I'm going to do now is I'm going to take all the stats here and use the lowest. When I'm saying the lowest, like the worst stats, and increase the trades to 1,200. So let's do that first. 1,200 trades. Win rates, the lowest, 33%. The reward risk ratio 1.66, that's the lowest. 1.61, sorry, actually 1.61. The risk per trade we'll use at 0.2%. Right, and then max drawdown 4. Okay, so let's calculate. So what I've done is I've just mumbled everything up but taken the worst possible scenario. So that's telling me now that with these stats, if I have a win rate of 33%, if I risk 0.2% per trade, match drawdown is still 4% because of the program, and I have a 1.61 reward risk ratio, there's 100% I will get kicked out of the program. There's 100% at a point, at a peak of the equity, I will draw down by 4%. Okay, but now let's just reduce the risk. Let's reduce it to half. Okay, 99.9%. Let's reduce it even further. $98.7. Let's reduce it further. $63.9. Okay. Now, the reason for this exercise is I've only reduced the risk per trade, meaning that I didn't initially put my risk at 0.02%. I started with 0.2 and worked my way down, meaning that you can risk a certain percentage, but as the trade develops, it's important and the value of keep on reducing that risk. Your job is to manage risk, meaning reduce your losses wherever you can. By doing that, not just for one trade, but for all the trades, and as an average, you will see that you'll be in a much better position to move forward. So even though it still doesn't look attractive, I went from 100% of ruin to 63.9% just by reducing that risk per trade. And remember, that doesn't mean my profits are only going to be based upon that percentage. My profits will be based upon 0.2. But on average, I'm reducing my risk whenever I can. So the value of that is highly critical to understand. Okay. With that said, basically in terms of time, I'm done, Victor. I transfer it over to you for any final thoughts or comments.
Awesome. In the audience, they are seeing the value, the awesomeness of these what you are sharing with us, Ashley. There's one little thing I want to say. I think that exercise is very insightful. It's very good, because think about this, traders. What good is a profit based on, let's say, a position size, right? When you're comparing 0.2 and 0.05% risk on each trade, right? Depending on what percentage you choose, you're going to end up having a different profit, in terms of dollar amount, right? Because you're taking bigger risk, you're going to gain more, right? because the system didn't change. Everything that Ashley was doing was just changing the position sizing, how much he's risking per trade. But the system didn't change, right? So the amount of R that it's the same system, both examples is going to end up is going to be the same. Let's assume it's going to be, I don't know, 10R, right? In the case of 0.2, you're going to end up after this many trades at 2%. And when it's a 0.05, you're going to end up with 0.5%, right? 10R after this example. So you're going to say, well, if I have to choose between 2% and 0.5%, what do you want? If you only see this, then you're going to say, of course, I want that 2%. It's more profit. That's why I'm here. But what good, and this is the crucial part of knowing your risk of ruin, what good is the prospect of earning 2% going to do to you if you don't have the account at the end? Right? If you ask me, I get the chance to get 2%, but I have a high chance of losing the account, or I can get 0.5% profit, but I have a very good chance or a much better chance of surviving. Now you've put things into right perspective, where survival is a priority and not just chasing profits. That is, right, the basic need and necessity why you need to know your stats. Because if you don't, you're going to go for the shortcut and thinking you're doing yourself a great favor by, going for that 2%, which doesn't sound like a lot. But if you're going to lose your account, I mean, you're not going to have those 2% anyways, because you don't have the account. So on that note, I love this. I really, really love this, Ashley. You are my new best friend, Ashley. All right. People at home, anywhere you might be, on the road, well, hope you're not driving. But if you are watching us from whenever you are, hit the like button, subscribe to our channel. Allow us to keep on bringing traders like Ashley, and Ashley himself to keep on bringing him to our show to share these insightful gold nuggets for your benefit. I mean, these are things, and it's all for free. The only effort we ask for you in return is to click that like button. That's the only thing, right? It's all for free. There's no paywall. This is free YouTube content, but free doesn't mean it has a low value. This is very high value stuff. Believe me, it is. All right, that's it for us today. I want to thank everyone who was part of our team, and especially the audience who have been with us all these hours, hopefully enjoying as much as we did. Thank you for being here. You guys are great. Ashley, thank you very much for your contribution, which is thank you for your contribution. Harish says, me no friend. Yes, Harish, you are a great friend as well. Don't be jealous. We'll meet each other, Harish, in Discord in about 45 minutes. He's playing around, of course. All right, so thanks, everyone. Tune in tomorrow again, same place, same time, for more gold nuggets. See you.
Thank you, Victor. Bye-bye, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.